women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Live coverage of the final presidential debate Thursday at 8:30 p.m. Eastern Time here on Bloomberg Television and Radio.
People need it, and it's urgent, and our economy needs it. We have one little bump in the road with the Appropriations Committee that is not sure they're going to be ready, but let's hope they are. We're starting to write the bill, and then we can have the negotiation. But I'm optimistic.
Speaker Pelosi is optimistic, speaking to Bloomberg's Balance of Power. The administration is optimistic. Leader McConnell, not so much. We'll talk about that in a moment. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Francine Lacqua is away for the rest of the week. Here's the price action this Wednesday morning. Shaping up as follows in the equity market. A little bit choppy this Wednesday. Equity futures now unchanged on the S&P 500. Perhaps the story of the moment, through 80 basis points. We break through on a 10-year, up a couple of basis points on a session so far. Euro dollar 118.50. Just a remarkable story of euro resilience given what's happening across the continent. And the China story so strong relative to the weakness in Europe. You see that through copper, you see that through the Chinese currency. Story of the moment, though, Tom, has got to be down in D.C. and what is happening with Leader McConnell. The Washington Post reporting in the last 24 hours that Leader McConnell has advised the White House not to accept a pre-election deal for two reasons. He does not want to disrupt the nomination of Amy Coney Barrett to the Supreme Court, one, and two, he does not want to exacerbate divisions in the Senate amongst Republicans going into this election because there are many that are still unhappy about how much has been spent.
And another idea here, folks, which is so important, and I really speak to this to the global audience, maybe not up on the U.S. zeitgeist. It's real simple. The winds have shifted, and as so many predicted, the polling is tightening, and that, of course, includes Mr. McConnell's Senate. Emily Wilkins is expert on this with Bloomberg Government. How does it change, Emily, that we've seen the various races tighten where the Senate is truly up for grabs?
I mean, it's been fascinating to watch the map shift sort of more in favor of Democrats. I think it kind of comes down to two very big things here. Number one, it's Trump's polling numbers. He's behind Joe Biden. He's been behind Joe Biden. There just doesn't seem to be the same, there seems to be some sort of lack in the energy around Trump or maybe just more energy around Biden. But there's a substantial difference there. And the other difference is it's fundraising. We have just seen absolutely insane numbers raised by Democrats. That means more advertisements on the air. That means their message is getting out to people. And that puts the ball of the advantage in their court.
Emily, just how selective is that forcing the RNC and the president to be with this campaign?
I think it's sort of interesting when you do look at the dynamics that's playing out here with the stimulus. I mean, you see the president saying, go big, have more money, get more funding out there. I think that he thinks that this is very important for him and for his reelection. But I think with Republicans, you know, they are thinking more about their base, their fiscally conservative base. They're thinking about the national debt, and they're sort of saying to themselves, hey, can we really afford to pass another $2 trillion stimulus bill? And I think partly because the president's polling is a little bit low right now, a few of them feel comfortable distancing themselves a bit and saying, hey, we might not be fully on board with this $2 trillion plan.
Meanwhile, there's a question of whether anything can change the trajectory of the race at this point. Both camps trying to throw things at the wall to see if they stick. President Trump's camp is trying to come out with more details than Hunter Biden and a variety of international connections. The New York Times today coming out with a story about President Trump having a bank account in China. Are any of these stories making any differences for the electorate?
You know what, there's been so much going on, I think, in the last month, right? Like Trump getting coronavirus, just the first debate, everything back and forth there. Honestly, most voters at this point, they've decided, even more so than previous years. There are very few undecided voters out there. And what we've seen time and time again is that the voters who support President Trump tend to support President Trump. They've supported him through impeachment. They've supported him through a number of other potential scandals that would have wrecked a different president. And it still seems like they're going strong at this point. And I think those who support Joe Biden feel similarly. They just don't see themselves voting for President Trump. So I don't think we're seeing a lot of giant shifts at this point in the electorate.
Emily, great to catch up. Great work as always. Emily Wilkins there, Bloomberg Government and Congressional Leadership reporter. That has got to be one of the biggest differences between now and 2016 in the final 2 weeks. The amount of undecideds, how big that pool is to tap into. And that pool this time around, Tom, is much smaller compared to 2016 in the final 2 weeks.
It's way, way smaller, but they're going to the base. And I'll tell you, the polls have really tightened up the last couple of days. New York Times doing a great job on this, John. Sort of a compendium of all the different polls into a nice little box that clearly shows the president having his best day in ages in the last 24 hours.
New York Times Siena poll, Georgia, 45-45. That's what we can discuss with Kevin Cirilli a little bit later this morning.
Yeah.
Special coverage of the final presidential debate coming up in Nashville, Tennessee. That's on Thursday evening, 8:30 in New York, 1:30 in London. We can talk about Mookie Betts all morning. We'll be here all morning for the next couple of hours. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Francine Lacqua is away for the rest of the week. This is Bloomberg Surveillance.
opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it'll take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
They're raising a lot of money, $300 million. I could be the king of all fundraisers. I would be the greatest that ever lived. The President of the United States. All I have to do is give me a list of the top 100 companies. I'll call the president of every one. They will pay me whatever I want. I would set every record.
The president on raising money. This is something that has come up repeatedly on the campaign trail over the last couple of weeks. That was yesterday in Pennsylvania. And Lisa, the numbers starting to speak for themselves over the last couple of months.
Yeah, the Trump campaign currently having $63 million, evidently dwarfed by what Biden has in his war chest of $177 million. And this is really on the heels of President Trump's camp burning through cash. You could see them spending nearly $140 million in August, leaving them with less in the war chest. And frankly, John, this raises a question. For what end, right? We are seeing less advertising spending by the Trump campaign, but how much of this money is important to get out the vote and potentially for legal challenges after the election, should there be any close calls?
And the choices on where you spend that money, Tom, get a whole lot harder in the final weeks of the campaign. Where do you pull out? Where do you target even more?
Yeah, what's so important here is if you talk to every single grizzled politician, whatever side they're on, all the handlers, people like Kevin Cirilli, John, they emphasize this way more than we do, that this money, the mass of it, and the ability to spend it is a first-order condition. It's way, way, way more important than we perceive.
There is one big fat-free commercial tomorrow night in Nashville, Tennessee. And Tom Keene, I guess you've got to make that one count, haven't you?
Well, you really got to make it count. And, of course, we've got the experiment of the mute button. And John, I just think that, it's something all brand new to Mr. Biden and to Mr. Trump. And
there we go.
Every time he says it. Every time. I'm just
John,
waiting.
would you stop it, please? Would you please
I'm just pleased to say that this segment of this program is not on radio. It's on TV, so everyone can see this for themselves.
It's so
I have no idea what the people on radio listening to this in the next couple of hours actually think about it.
I know. You think...
Oh, dear Lord. John, I'll let the...
Tom Keene, Lisa Kravitz.
It's brutal. You got to
Jonathan
stop
Ferro.
it. Can you imagine tomorrow
You're
night?
Brutal.
If they do the mute button tomorrow night, can you imagine what it's going to be like?
If we have a debate... I don't think that's ever going to happen. Coming up shortly on Tesla, Jed Dorsheimer of Canaccord Genuity from London and New York. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
We think this case is deeply flawed and risks harming American consumers. We compete vigorously in the marketplace. Our industry, our sector, is marked by prices that are free or falling and rapid innovation, and those are really hallmarks of a competitive industry.
The same way that there was a push to re-regulate the banks after 2000 and 2007, you're seeing that now with tech. It's been the leadership sector. That's where the innovation is, and certainly it's forced the regulators to take an eye and look and see about monopoly pricing power. And so I don't think this is a blip. I think we'll have more issues or more press around this type of control issues for the different large players across tech and other parts of the economy.
That was Adam Cohen, Google Director of Economic Policy, and Henry McVeigh, KKR Head of Global Macro and Asset Allocation. The U.S. Justice Department suing Google in the most significant antitrust case against an American company in 2 decades. 20 years ago, it was Microsoft. 20 years later, it is Google. This Wednesday morning, good morning. Here's the price action. Equity shaping up as follows. That story did not weigh on the stock of Alphabet in yesterday's session, that's for sure. Equity futures up 3, marginally positive, up about 0.1%, up 2 basis points, just about holding in there on a 10-year Treasury north of 80 basis points. And in foreign exchange, euro dollar, Tom, 118.52. We advance 0.25%, and more broadly, the story in foreign exchange this morning, a weaker dollar.
Weaker dollar, and I'm watching EM as well. Yuan out to new strength here, Chinese renminbi, but I'd also point out yen to a 104.87. I haven't looked at that chart, but nevertheless, part of that weaker dollar story. Right now on Google, and this is going to go on forever, I want to talk about what matters. And what matters is I remember when Google had 50-some% of search, and it would be unthinkable they could get to, say, 65% of search. And then it was unthinkable they get to 70% and on and on. And so much of that has been the Google link into Apple. Wall Street Journal writes this up today. Alex Webb with us with Bloomberg Opinion to give us some wisdom on this. So what is this relationship, besides it's involving billions of dollars, Alex? What does Google want from Apple? What does Apple want from Google?
So Google pays Apple something around the $10 billion mark, perhaps a bit more, $12 billion a year, to be the default search engine in the Safari browser, which of course is the default browser on all iPhones. And that has been hugely significant in driving the revenue that Google gets from its search results on mobile. It was, Google is one of the biggest, between Google and Facebook, they own most of mobile search, most mobile advertising revenue. And a lot of that, if you're not on an iPhone, you're using an Android phone, which is the operating system built by Google. So it gave Google essentially, control over that mobile search market. And also from Apple's perspective is what helped them grow their services revenue. When we look at Apple's services revenue, that's been the one bright spot over the past few years. And a lot of that growth is in fact coming from the checks they get every year from Google.
Alex, if you surveyed the people and the choices that they make, do you think they'd be in line with the regulator? Let me tell you my personal experience, whatever that is worth. I use Google because it's better than Bing. I use Chrome because it's better than Safari. I use Chrome on a Mac because it's better than Safari. So, Alex, you tell me, have they actually surveyed people? Is the consumer actually being damaged by this?
So I don't think the consumer is being damaged now. Like, the consumer can still choose to use Google. It's just not necessarily the default search engine. They can still decide to make it the default search engine. It also became something of a self-fulfilling prophecy. You know, at this stage, we're talking to an extent about putting toothpaste back in the tube because Google, you know, maybe was slightly better than Bing 10 years ago, but then it got all this data from the fact that everybody was using Google rather than Bing or DuckDuckGo or any number of other search engines, and the more data you have, the better your search results become. And so that, you know, it's what has helped Google build this dominant position. And so these investigations are about maybe putting a check to that. And then when you look at the changes proposed by the House Subcommittee on Antitrust, it's about ensuring this sort of thing doesn't happen again.
Google can come up with their own argument, Alex. I'm sure you'll give me that argument in just a moment. But this is more than just about the United States. This is about the world right now. And it's about China and the United States, too. If we start hitting around Silicon Valley and the dominant players in the United States, how do they compete with what's happening in China at the moment?
Well, the fact is they don't compete already. You know, Google has no market position in China. It's not allowed in China. Neither is Facebook, Apple, and neither is Amazon, really. Apple is the only one that with the presence there. There is a little bit of Google Cloud business, but when it comes to its core operations, there is no presence in China. So, you know, equally,
Alex, let me jump in. That, Alex, is the point. They can't get into China, but China can get into the United States. Isn't that the point?
I'm not sure that's true, no, because if you look at Baidu has no market position in the US, nor is it likely to. TikTok is getting pushed back from the US, as been well
Alex, do we want them
chronicled.
To? Alex, do we want them to? That's the question I'm asking.
I think that's a false equivalency. You know, the argument that if you push back against Google, then China takes up the space, that's not necessarily true. You know, we haven't seen any evidence of that being the case. In instances, you know, if you think about the pressure that Microsoft was hit with 15, 20 years ago, did we see China come in and gobble up a huge amount of market share from Microsoft? No. I think that's the argument that the big tech companies would like to make. I don't think there's much much truth to it.
Alex, to build on what John was saying, maybe this is a false equivalency. However, this does underscore the lack of political will to break up big tech in the United States, because there is this feeling this is the gold jewel of the United States. This has been what has driven growth. So barring breaking up these companies, what are the steps that regulators would actually be willing to take to reduce the dominance in these fields?
So you talk about two sets of measures here. You talk about structural remedies and behavioral remedies. And actually, Europe has been pretty strong on behavioral remedies. That's about sort of saying you've got to stop doing this one thing. For example, making Google the default search engine on iPhones. And then there are structural remedies, which is actually about ensuring that one arm of the company, there's a Chinese wall, no pun intended, between that part of the company and a different part. But that could also, in extreme eventualities, lead to a breakup. And ironically, the Department of Justice has said that it prefers structural remedies, which does leave the door open to a breakup, as unlikely as that might seem. But it also means that, for instance, Android would not be allowed to talk to search, and you couldn't have these two businesses working hand in glove to the extent they might do at the moment. And so, internal separations are something that they could well push for.
Alex, does Google battle this, or do they just say, look, let's get this fixed now, and they unilaterally make a couple tweaks and changes to show that they're opening up to a market where they're winning every day? Do they get it fixed in 2021, or does this go on until you get your first gray hair?
I think that, unfortunately, the grey hair ship was long sailed, but equally, it really depends on the appointments made by whatever the next administration is. Who is placed in positions of power at the DOJ and the FTC? What is their willingness to accept some sort of compromise? I think, it would be in everyone's interest for this not to go on for years. But equally, it depends how much political capital is tied up in these sort of decisions. We know that Kamala Harris is perceived as being relatively close to.
We close position on euro at 118.53. Okay, we have £200 in profit.
a different fallout from, having a Trump administration, which might be keen to crack down on this. So there are lots of different ways this might fall, and I think the political element is going to be really important here.
That'll be interesting to see. Alex, we'll have a nice brief there. I'm sure we'll do it again. Thank you so much with Bloomberg Opinion. Right now, joining us, Jed Dorsheimer with Canaccord Genuity, in here on another one of these acclaimed stocks. Let's just start with first principles. Jed, good morning. On Tesla, is it an auto company or a technology company or something different?
So good morning. I think if you asked Elon, they'd say that they're an energy company. I think, if you look at the signs and how this company is developing, it's developing to look a bit more like an auto company.
So going forward, is it basically coming into this earnings period with a bar that is just so high that there is no way that it can meet expectations today?
Well, I think just from a level set perspective, we've already got the delivery numbers. And speaking of a bar set high, so you're likely to see Elon stick to sort of that 500,000 delivery number. We think that's a virtual impossibility for Q4 because that would imply 185,000, which would be a level that not only is historically a peak, but it's about 50,000 over what they've ever been able to deliver. So if you kind of take that out of the equation and say, well, maybe they strive to that, but we're likely to get sort of that 180 type number, which is still a great result. Then I think the conversation is likely going to pivot to that of cost structure.
Zooming out, Tesla is not a story of a balance sheet. It is a story of faith. It is a story of the believers, the naysayers, and it has been continually. Is there a broader story in Tesla, an indication of froth in markets, in the eagerness for some sort of new winner in the United States? Or is this really worth what it's being said it's worth in the markets? And really, it is still more of a balance sheet story than the faith story that many people think it is?
Well, I mean, couple points there. That's probably a fair argument for many stocks, in 2020. Now, that being said, I would say for 2020, Tesla is a bit of a balance sheet. I mean, they have successfully raised a decent amount of money to shore up what was their obvious weak spot. However, the point that I think you're going towards and raising is one of which I was mentioned in terms of cost structure. So is it an energy company? Is it a technology company? Or is it an auto company was how you open that. And I think there, it's really going to depend on what the margin profile looks like. And that is where I think all eyes are going to be today, as well as next quarter too. Can they deliver these unit volume numbers and actually make money, and or are we going to see competition that's coming into the market and a need to try and drive down cost structure faster than they might be able to do, and does that result in margin compression? And I think that is going to become the bull bear, if you will, as we go into 2021.
Jed, as we're having this conversation, we put up a chart of Tesla over the last 1 year. And for the people that might have been watching it, looked at that chart and thought, really? And then it disappeared quickly. Get it back up more than 700% over the last year. Jed, it's unbelievable. If we wake up November 4th, let's talk politics just briefly. November 4th, okay. Blue wave. What does it mean for this name?
I think, I guess if we look at politics and we say, and we take the argument that a Biden-Harris administration is going to be more favorable to clean tech and therefore as well as stimulus associated with that, then one would say, well, that's very good for EVs, but that's good for all EVs. And remember, Tesla is certainly out front, but they are at a disadvantage by the fact that they've already delivered so many vehicles where their vehicles are not eligible for that tax credit, which allows for a VW, for Porsche, for Volvo, for Ford to actually have an advantage in terms of cost. And so that brings in, even in a positive administration that would be pro-EV, it brings in the competition argument quite a bit more. If we look at Trump and we say, hey, Trump's going to, in a Trump re-election bid, I think you look at Tesla over the past couple of years, they've been able to really be successful with an administration that's not pro-clean tech, so to speak. And so, you know, I think that competition argument is probably going to be the bigger one as we continue to march forward here.
Jed, great to catch up on this particular story. Thank you, sir. Jed Dorsheimer there, Canaccord Genuity analyst on Tesla. And beyond, Tom Keene, the thematic trades around the election, 13 days away.
Well, the thematic trades on tech, we got the tech earnings coming up here, and it'll be fascinating to see. You've got to believe, John, they will be great on Amazon, Apple, and the rest just on unit basis. But it's a case-by-case basis. And again, Netflix with that pause yesterday.
Netflix was a fail. Much more on that coming up a little bit later. Coming up next, Lauren Sauer, Johns Hopkins Assistant Professor of Emergency Medicine. That's next right here on Bloomberg. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. For our audience worldwide from London and New York, this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This has so entangled itself into our social fabric and into our social status pipelines and into the development of children that even if you opt out, that's not enough.
From London and New York, for our audience worldwide, good morning to you all. This is Bloomberg Surveillance. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Francine Lacroix is off today. Tom Keene takes that little break this time in the morning. I keep saying it, it's nice. Let's get to the markets just quickly. Equity futures shaping up as follows. This Wednesday morning on the S&P 500, futures flat to positive about 0.1%. In the FX market, dollar more broadly is weaker against G10. The Chinese currency, the standout over the last couple of weeks, that bleeding into a much stronger copper price as well. Multi-year highs on a copper price. 2018 lows on dollar China. That's a stronger Chinese currency. In the bond market, through 80 basis points, up 2 on the session to 0.8%. on a US 10-year. That's the story of the market. Let's talk about the story of this pandemic. Many people are referring to this as the second wave. The next guest refers to it as the third surge. Lauren Sauer joins us now, Johns Hopkins Assistant Professor of Emergency Medicine. Professor, great to catch up with you. Why is that a better way of understanding what we're going through in Europe and the United States currently?
I think we saw that first wave very early in the pandemic, and across the U.S. and in Europe, we've seen second surges in cases. And I do like thinking about this as the third surge, because I think it is moving into fall. It is moving into flu and other respiratory virus seasons. And I think we will see that increased number of cases, that pick up again, that is going to be potentially very serious. And that reminder that this is the third time we've seen this. We have tools in our toolkit to mitigate it and to fight the spread, and we have to use them now.
Well, that really leads to what I wanted to ask, which is we're seeing record numbers of cases in Germany and France and in places in the Midwest in the United States. Is the third surge going to be much worse than the first and the second in terms of both virus cases as well as deaths?
The numbers are definitely ticking up and are very concerning. There has been a lag, or there have not been as many deaths, but we do tend to see a lag in deaths versus hospitalization of cases. We're also seeing with some of the recent studies that are coming out that the hospitalized cases are of younger, healthier people, which is concerning. And so keeping an eye on how people behave is going to be really important, especially as we move into those holiday seasons where people are going to be potentially gathering with individuals that they haven't been spending time with. They might even be adding travel to their daily routine. And so having this situation where hopefully we see a decreased number of flu cases because of these social distancing, these masking and other activities that we've been doing all summer, that we still have the potential to have two viruses coupled together, increasing the case and the burden on our hospitals.
Lauren, just when it comes to the seasonal flu, certainly not much travel between the southern hemisphere and northern hemisphere this year. Does that affect the spread of the seasonal flu, and could it be a lot lower this time around?
The numbers are looking lower from the southern hemisphere. We don't know really what that will mean for us yet. We're at the very tip of starting flu season here. I think everyone is hoping that both the travel restrictions and the shelter in place, social distancing and masking requirements will lead to a fewer number of flu cases. There's also a significant increased push to get people to get their flu vaccines, which I think is good. It's sort of a wait and see situation because there have been relaxed restrictions, earlier in the year, and there's relaxed restrictions in many cases right now, which is why we're seeing this third surge of COVID cases as well. So I think we're all sort of hoping that that's the case, that that's what happens, but we'll have to wait and see.
Lauren, just quickly, just a final word. You mentioned air travel. The risks around air travel, there's been some conflicting reports and some research done on that recently. What's your take on things?
I think the research looks very positive. I think we're seeing that that air travel is actually quite low risk. Those studies that have recently come out do not factor in a lot of the human behavior. So that being said, we see few outbreaks associated with air travel now that masking and keeping that third seat is happening in a lot of places. So I think it's promising data, to say the least.
Lauren Sauer, great to catch up of Johns Hopkins. Thank you very much for joining us. Lisa, don't tell anyone. It might mean I get to come home at some point.
So clearly, you're basically saying,
don't tell Tom.
Look, if I get on an airplane, perhaps theoretically in a week now, from London to New York, is it going to be safe? And she said yes, so you can come on back.
These are questions that I ask personally for me, but I've got skin in the game, and I'm happy to share that with everyone and disclose it up front. Alongside Lisa Bravitz, I'm Jonathan Ferro. Tom Keene has had his break. He's had his little coffee. He's had his little nap.
He's ready.
He'll be back with us shortly. Coming up later, NASDAQ President and CEO. That's at 9:30 a.m. in New York, 2:30 in London. Looking forward to that conversation. A little bit later on Bloomberg TV. This is Bloomberg.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Your market open is about 2 hours and 35 minutes away, and here's the price action this Wednesday morning. Good morning to you all. Equity futures treading water, unchanged to positive, 0.1% on the S&P 500. Foreign exchange, weaker dollar. That's your story this morning through FX, through G10 against China. You see it in the copper price. Really, really interesting stuff. Outside of that, in the bond market, through October, Lisa, we have not had a close below 70 basis points the whole month. It's where we started the month at 70, now just north of 80 basis points on a 10-year.
Yeah, but there's a question, how much further can it go? Russ Kosterich from BlackRock yesterday saying he does not see this as having big legs. And honestly, I think that the hallmark of this week has been a lack of conviction in markets, John. There was a story in the FT that highlighted one asset manager saying, we are an asset manager. We are not bandits or gamblers, basically saying that it may sound timid to not make a decision, but deciding not to make a decision is a decision in itself. So not making a lot of big
Cameron
moves.
Price once said you need a PhD in psychology to read this market, and maybe not in economics, and maybe that applies to the substance down in DC. We're reading the mood of the room, Lisa, constantly. We're not talking about making policy. Are the talks continuing? Are they continuing? Is there a deadline? Isn't there a deadline? Are people happy, unhappy?
Honestly, the key story has not changed. Stephen Mnuchin, Nancy Pelosi tried to get a deal, and Mitch McConnell not hearing it, not wanting it. It's the same story.
That is the bottom line. Nobody wants to own the failure of fiscal talks down in D.C. right now, and Leader McConnell still just sitting on the sidelines. Coming up next on Bloomberg Surveillance, live on Bloomberg TV and radio, Mona Mahajan, Allianz Global Investors U.S. investment strategist, and I can promise you, Tom Keene will make a return at the top of the hour, right here on Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
what is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
People talk about a K-shaped recovery. It's absolutely true. Those at the bottom are having a very hard time.
It's not clear how exactly you get people out and spend the money and get the economy going.
A multi-year bear market in cyclicality is probably over.
The market is not as well prepared as it normally is for these kind of downside events.
Central banks and governments are in this together. They're one wallet.
We need support for the economy, both for monetary and fiscal policy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York and London, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. 13 days until Election Day. The deadline wasn't a deadline, and Tom Keene, nobody wants to own the breakdown of fiscal talks on Capitol Hill.
Yeah, well, that's there, and that's just one of the stories there. I love what Greg Valliere said a couple minutes ago where he talked about Trump as an albatross for congressional Republicans, and I guess you're getting that body language from Mitch McConnell. But, John, I really want to underscore, why is the bond market moving? As you know, John, we had a 0.83% on the 10-year yield, the steepness of 2/10s on a weekly chart back to March of 2018. What is the why there? John, we're pricing in stimulus at some point.
Through 80 basis points, a rally in the commodity market as well. Lisa Abramowitz, I wonder if off the back of a move in treasuries, people start to talk about reflation really quickly all over again.
Yeah, and I don't know that the underlying data is really supporting that. We're going to get a read on that 10:30 a.m. EIA U.S. crude oil inventories. This comes on the heels of a report yesterday that came out showing a surprising build in U.S. inventories, meaning people are not consuming as much oil and gas. Read, people aren't getting in their cars and driving places as the COVID crisis continues to spread. Meanwhile, today, I know you guys care a lot. I know you're tracking every single speech. We get a lot of Fed speak. We've got Loretta Mester, Neil Kashkari, Robert Kaplan, Tom Barkin, Randy Quarles, and Jim Bullard, all today. Every day, it seems like they speak more, they communicate that much less because we know what they want to say. We're going to hold rates low. The question is just the threshold to further stimulate. And 2 p.m., I know you guys are totally scintillated, pinned to your Bloomberg terminals for the Fed Beige Book, taking a look at activity in October. The question here is deceleration, John. How much has the spread of the pandemic really trickled into economic read-through, to consumer confidence, to business confidence? And perhaps we'll get a picture.
Tom, this has become my favorite part of the show. Lisa telling you what's coming up through the day and then telling you why it doesn't matter repeatedly.
She's on there.
For about 60 seconds.
Gifted. She's gifted. There's no other way to put it. The Beige Book, I've never put a lot of emphasis on, John. It's very dated, but every once in a while there's a tea leaf there.
Thank you.
Really, John, how the Beige Book folds into the earnings expectation. And, of course, a little bit darker here off of IBM a few days ago and the Netflix joy last night.
It's got to be a quiet Wednesday morning for me to even pretend to be excited about the Beige Book. I'm not. Here's the price action. Equity futures on the S&P 500 look a little something like this. Almost positive 0.1%. I'm not even going to try. In the FX market, euro dollar 118.50. We move higher. It's a stronger euro, but more broadly, what the story is this morning is a weaker dollar. Copper higher. Chinese currency stronger. In the bond market, yields up by a couple of basis points to 0.8%. That's the move of the morning for you, Tom. Is it that, or is it what's happening in foreign exchange with that weaker dollar?
Well, it's what's happening in foreign exchange more now. 2 hours ago, I would have said it was yield. John, I really want to point out and walk through this because I think it's important, and, of course, it advances the real yield, which you can see Fridays here across some of our Bloomberg enterprises. John, nominal yield versus a rising five-year break even gives you a substantial real yield at negative 0.92%. Even with that lift in nominal yields, we've still got a substantial negative real yield.
Let's continue the conversation with Mona Mahajan, Allianz Global Investors U.S. investment strategist. She joins us now. Mona, if you disappeared from the market for the last 10 years and heard us talk about a breakout in Treasury yields of 80 basis points, I think you'd wonder what planet you've just landed on. Mona, 80 basis points. When can we get a real move on Treasuries?
You know, interestingly, from a percentage perspective, this was a pretty real move. You know, we're now off the lows of 46 basis points from this crisis back up to 80. What we're seeing in the markets is pretty consistent here. We talked about weaker dollar, higher treasury yields, higher gold prices. This is a market that's thinking at some point stimulus is going to happen, and also perhaps starting to price in over the last few weeks this democratic sweep idea, where in that scenario you do also get more stimulus, but also more spending. So it does feel like we're on a trajectory. To Lisa's point earlier, how high can it go? We may not get much more movement from these levels until we see actual, as the Fed says, eyes of inflation.
Mona, part of this is the glide path involved. With your computer science background, it's real simple. At some point, there's a kink. At some point, there's a jump condition. Where is that on a 10-year yield? Is it near here, or is it surprisingly much higher?
Yeah, you know, we think over time, if inflation is in the 1.5% to 2% range, real GDP growth in the U.S. also probably at some point 1.5% 2% as the actual GDP growth. Yields should also at some point be in that 1.5% to 2% range. Now, of course, we're now emerging from a very deep crisis. We don't think that type of level happens in the next 12 months or so, but we're putting the ingredients together certainly for an inflationary environment, or at least for a pickup in inflation expectations. We're keeping rates low, we're adding QE to the system. Growth may be accelerating next year, especially if we get those vaccines, especially if we continue to get stimulus and investment into the economy. And so we are certainly setting up for that pickup in inflation, which would lead to a pickup in those yields back to more normal levels.
Okay, so a pickup in those yields. In the meantime, there are a lot of people saying the reason why yields are rising is because of supply, because of the stimulus, because the U.S. will have to sell trillions and trillions of additional treasuries. Is that the real story here? I'm looking at the total value of negative yielding debt globally. It is close to the all-time high of $17 trillion. Where else are investors going to go for yield other than the United States?
Yeah, I mean, absolutely. That's part of the story as well. And, you know, keep in mind our yield, even here at 80 basis points compared to Europe, Japan, across the globe, still relatively fairly attractive. And of course, this year in particular, Treasury bonds have been one of the best performing asset classes, not only within fixed income, but really across the board, especially since that March 23rd low. So clearly there is this flight to safety, but also this hunt for income. But to your other point of your question, where do people go? Well, they're also looking beyond the fixed income market. Clearly, there's been this push for investors to go out the risk spectrum. We're seeing that clearly in the U.S. equity markets. Now more a little bit global EM, but also in parts of higher risk fixed income as well, credit markets in high yield, as well as parts of investment grade.
Mona, this is a familiar conversation for many. The reflation story that you described just moments ago, fold that into the equity market and the much talked about rotation that has really eluded us over the last couple of months.
Yeah, you know, that's really the key question here. Will we get over the next 12-month period this much anticipated and much alluded over the last 10 years rotation into this value cyclical trade? Clearly, and when we looked historically over the last 10 years, there have been approximately 4 instances where value cyclicals have led in a more sustained way. And that time period, usually they're leading for a 6 to 12-month period over those 4 instances. We think we could be set up over the next 12-month period for another leadership in value cyclicals. And of course, that would be in the scenario where we get the vaccines in the latter half of this year. Of course, it takes some time to manufacture and distribute, but markets will start pricing that in sooner. Of course, we'll get that reacceleration, hopefully in growth, not only in the U.S., but globally. And so in that backdrop, combined with ongoing low rates and ongoing stimulus, we do see a potential for that value cyclical trade to reemerge. And so we think investors should layer that in over the next, when they get the opportunity over the next few weeks.
Mona, there's all these tea leaves out here. There was Procter & Gamble the other day, and right now there's Nestle coming out. And once again, organic revenue growth, it's not a big deal, but it's just simply better than the gloom that's out there. Is that the major call for the next 2 or 3 years? That we're, with the shock of the pandemic and the agony of the pandemic, Manchester shut down is just one example. Are we completely misjudging the ability of these companies to adjust and to adapt?
Yeah, it's interesting. I think last quarter, second quarter, we certainly got a lot of that as well. You know, the expectation was, you know, something for a negative 40% decline, and we came out, you know, negative 28, 29% or so. So there was a huge lowering of the bar in terms of expectations, and there was a nice beat. You know, historically, companies are known to do that, keep the bar low, but the percentage of beat was much more substantial than we've seen in the past. That could be the trend over the next couple of quarters. Although we will say, you know, over time, that probably goes back to more historic averages where it's a 3 to 5% beat on average. But to your point, I do think that in many cases, you know, companies have performed much better in this crisis than we've seen in the past. And partly that's because we've become a more digital, more online economy. You know, this acceleration to a more stay-at-home world has really benefited certain companies and really has helped a lot of companies across the board. And so I do think the ability for consumers to buy online and to show demand in that way has helped. And so we do think this quarter will certainly see a nice beat as well. And over time, it'll be more normalized, but we see the ability for companies to rebound nicely over the next 12 months.
Mona, thank you. Always great to catch up. Mona Mahajan
Thank
there
you, guys.
of Allianz. Thank you very much. Thank you. Tom Keane, Purina Pet Food over at Nestle, just crushing it. Apparently pet adoptions and fosterings at a record high. Does Vet Bill have Nestle pet food?
No, Vet Bill,
is that good enough for him?
No, God, no. Are you kidding me? He has to have the one prescribed by the veterinarian, which is a medieval cartel set up in the 14th century. I would kill for Purina to darken the door at the Keane household.
What did that mean?
Does he get a seat at the dinner table?
No, this is a major argument.
With you guys?
This is a major argument. The answer's no, and only Mrs. Keane feeds him. And of course, the family thinks that he should have, you know, a human equivalent. Where I'm thinking, you know, water and a Gainsburger.
What's a Gainsburger?
Gainsburger was like Tang in Sanka.
Oh, I know what Tang is.
Yeah,
I know what Tang is.
It was
You've told me what
Gainsburger
Sanka
was the
is
same
before.
era. This is
Some
Mad
education.
Men. You know, January Jones is in the kitchen serving the dog Gainsburgers.
Very cool. Okay. At least it's
John,
like,
I'm not
what?
concentrating today. I'm looking at
I
all
know.
the other networks over here playing highlights of Mookie Betts, and I'm just not concentrating.
Yeah.
Do you want to explain who Mookie Betts is?
Hi.
Why don't
Mookie
you tell
Betts
everyone who Mookie Betts is
is
just
the
quickly,
Babe
Tom?
Ruth of the modern era. The Red Sox traded him for 6 packs of Cracker Jacks, and he's killing it for the Dodgers, including that steal of third base last night. John,
London
third
and New
base is
York.
tough to do.
That's the dig for Tom today. Just keep saying Mookie Betts. If you want to wind him up, send him a
CNN.
tweet. He's available on social media at Tom Keane. Just
And for
type
parties.
Mookie, then type Betts, and he's great at a party as well, Lisa, when things reopen. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are moving closer to a deal on a new stimulus package. Pelosi hopes she can get an agreement this week, and that's crucial to getting a bill passed by Election Day. One problem, though, Senate Republican leader Mitch McConnell is warning the White House against a Pelosi-led deal before that November 3rd election. He hasn't committed to a pre-election vote. British Prime Minister Boris Johnson will impose England's tightest coronavirus restrictions on Greater Manchester. Talks with local officials broke down, and Johnson warned that lives would be at risk if the government failed to act. The Prime Minister also left open the prospect of a national lockdown if infection rates keep on climbing. And shares of Netflix are falling. Today, the streaming service missed Wall Street estimates for subscribers. That renewed doubts about its ability to maintain growth. Netflix had warned that the pandemic-driven subscriber boom wouldn't last. In fact, the company said the surge in new customers could actually suppress growth in the future. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
We all want to get an agreement because people need it, and it's urgent, and our economy needs it. We have one little bump in the road with the Appropriations Committee that I'm not sure they're going to be ready, but let's hope they are. We're starting to write the bill, and then we can have the negotiation. But I'm optimistic.
Speaker Pelosi seemingly would like a deal. The administration seemingly would like a deal. Leader McConnell seemingly, I don't know if he wants a deal at this point, in any way, shape or form, in the size that they're discussing, Tom Keene, of in and around $2 trillion.
Yeah, it's just not there. I mean, that's all there is to it, John. I mean, you know, everybody's talking about it. Everybody's been right so far. There's huge disagreement. But, yeah, I think the story's really moved forward one day before this debate.
Another morning's edition of Headline Roulette down on Capitol Hill. Lisa's favourite. The price action going into all of that. Shaping up as follows. 2 hours and 12 minutes away from your opening bell. Your equity market looks like this. S&P 500 futures come in just a little bit. Down 5. We're negative about 1/10% and change. In the bond market, yields were much higher than this a little bit earlier on today. Up 3 or 4 basis points at the long end of the curve. This morning, 0.8% is your yield. We're up a single basis point on the session. So that move in the bond market just fades a little bit. I want to turn to Netflix just quickly because this is the stock to watch this morning. The expectations game of earnings season. Netflix down and down hard, off by 6%. Subs were a miss. The guide was a miss. But the numbers through the first half lifted the bar so high. They added almost 26 million customers in the first half of the year. The strongest start ever, Tom. How do you replicate that kind of performance?
You don't. And it's going to be interesting to see how tech, you know, pandemic tech, if you will, goes forward quarter to quarter, rather. We'll have more on that right now. Netflix bringing in 9 cents on the dollar. I don't get it. Anna Edgerton is with us right now, our Bloomberg congressional reporter. She has 3 Netflix account logins she steals from constantly, and she joins us right now. Anna, can you explain how Congress people that have to get elected every 2 years or 1/3 of the Senate can focus on all this baloney while they're running for office? I don't get it.
You're right. That is a very difficult thing to do. And that's why Nancy Pelosi is doing it for them. You know, she's really been the one negotiating this deal with the administration. And you can see that in the way Senate Republicans are very resistant to anything that they come up with. You know, this would be good for Pelosi if it happened. It would show that she is the master deal maker that she's been throughout her whole career. It would not be good for McConnell because then he's going to be dealing with a very real split in his conference.
Let's go all lame duck. John, are you up to speed on lame duck? That's the period after the election before the next
I am up
Congress.
to speed on
You're up
lame
to speed
duck.
on. Do they have a lame duck parliament? Do they have a lame duck parliament?
We change things. Change things pretty quickly in the UK, as you know, Tom. If you lose the election, you move out.
Off with your heads. I get it. Okay, Anna, we're a little more graceful about it than those heathens over in England. Anna, what happens, lame ducked?
So the main thing that the lame duck session has to do is fund the government, which almost seems quaint to talk about government shutdowns like we used to, but government funding does run out by December 11th. So we're running up against a funding deadline, and that could be the kind of train leaving the station that carries stimulus with it. So we're going to be looking for any compromise between the House and the Senate if they do manage to agree on some of the most bipartisan provisions of another round of stimulus. It could just go along with the government funding bill that needs to pass in December.
So you sound really skeptical that anything could get done before the election. Is that accurate?
Yeah, I mean, just looking at the calendar, it's hard to see how it happens. You know, you have so many days for them to tidy up the legislative language. You have so many days for the House to pass their bill. The Senate has to pass their bill, and there's a few, 72-hour rules, deliberations that the Senate has to go through. And, when we're talking about $2 trillion, you do have to pay attention to the legislative language. You don't want, just billions of dollars disappearing because of a comma. So it's just really hard to see how this all comes together before November 3rd.
And just a final question from me on the campaigns. Where is Joe Biden? We have a tradition here in the UK and British media where if you play one clip of one campaign on TV, you should play another clip of the other campaign of a similar duration. And my team often come back to me in the morning and say, we can't find much sound on Vice President Joe Biden. Anna, where has he been this week?
Yeah, he's out there. I mean, he's doing debate prep. He's got a debate tomorrow, so that's definitely a huge focus. But he doesn't really need to be out there right now. He's running so far ahead. He's got a ton of money in his war chest. He can just kind of coast to the election and hope nothing really changes before then.
I mean, and I just figured it out. That's where Cirilli is. Is he like, the moderator for Biden's debate prep? Is he like grilling the vice president?
No, but I'm sure he would be a good member of any candidate's team. He's probably going to be standing outside and telling us exactly what happened and what to expect next.
And okay, great. What do you expect next from the senator from Kentucky?
From Mitch McConnell.
Yeah, well, what do you mean? Come on. Yes.
Yeah, he is going to be whispering in Trump's ear saying this isn't a good idea, which is exactly what he did the last time Trump said, I'm pulling my negotiators out of this stimulus negotiation, because it's not, McConnell already has senators saying, I don't want to vote for this. If he puts them up to voting for it, it's not a good look for a divided Republican conference.
Anna, come back. That was fun.
Please.
Thank you. Anna Edgerton,
Glad to be here.
Bloomberg's congressional reporter. Well, I felt like I had to say it, Tom.
Yes.
Given your abuse at the end then, just have a bit of patience with people. They're just confirming what you're asking.
Rand Paul is the other senator from Kentucky. Does anybody care what Rand Paul thinks about stimulus?
Some people do. Some people might. Tom, it's 7:23 Eastern. Down in D.C., that's basically 5 a.m. You know that. Just go slow with people.
Rand Paul, August 19th, Rand Paul.
Okay.
No incentive to open economy, quote, if you soften the amount of suffering.
Tom, we look to our people to help us out. If you chase them all away, they will not come back. They will go to debate prep.
Right. Hey, Lisa, I'll tell you someone who's not coming back. Rand Paul's never coming on this show after that.
That's a fair point.
That's what he said. You can't
Doesn't
make
every
it up.
Republican senator at this point, Tom, count? Isn't that the whole point down in D.C. at the moment for Leader McConnell, that he just does not have the numbers?
Seriously, the fact is a lot of people got this right. The race has tightened dramatically in the last 24 hours. The polling today, John, seriously, will be fascinating.
So here's a question for you, Tom. Do you think if they do agree to a stimulus bill, if Leader McConnell put it on the floor and these Republican senators voted for it, do you think that would help them in their respective races?
Unsure. It would definitely help the President of the United States. Unsure. And President Trump said that ahead of my script this morning. He said they will come around. I'm paraphrasing.
I don't know. I don't know that it would, because people aren't going to necessarily get the checks before the election. So it could just look like a win for the Democrats. It's a really dicey political calculus here, which is the reason why it's unlikely it's going to get done, John.
Are the fiscal hawks still out there? We got some?
Some.
I'm surprised. I just haven't heard from them for the last 4 years. I just can't believe they're still out there.
It is the silly season. I mean, we're there. We were there starting about 10 days ago, and we continue forward. The debate tomorrow night, John, is going to be fascinating. I may threaten to stay up and watch it.
I will wake up early in the morning and I'll watch a replay
Get your full English. Yeah, full English, the whole 9 yards.
Or plain scrambled eggs. I like to keep it light.
Porridge.
beans.
I don't have to full
Bean.
English.
What's the little
Bit of
black
oatmeal.
thing? What's the thing on the plate that looks unedible?
I'll tell you in the commercial break. Coming up, Kevin Giddis, Raymond James, Chief Fixed Income Strategist. That wasn't meant to sound rude at all.
Oh, but it was.
Bloomberg.
We're killing it today.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From London and New York, this is Bloomberg Surveillance for our audience worldwide, live on Bloomberg TV and radio, alongside Tom Keane and Lisa Abrowitz. I'm Jonathan Ferro, counting you down to the opening bow, 2 hours away. Equities shaping up as follows. We were positive, then we rolled over a little bit on the S&P 500. We look like this. We are negative 5 points. We're down a little more than 0.1% in foreign exchange. Euro firmer, dollar weaker against everything in G10 through much of this morning. Throw in the Chinese currency into the mix as well. A really strong Chinese currency. Lows we have not seen on that currency pair since the summer of 2018. So that's dollar China down. That is a stronger Chinese currency. In the bond market, yields up 2 basis points to 0.8041%. And the challenge for any investor right now, how do you just get through the next 3 months and look out to 2021?
Well,
Take a listen to what John Norman at JP Morgan, head of Cross Asset, had to say.
I think we're assuming that something positive is going to happen in January. That's going to keep expectations pretty high in markets. But if nothing happens in January in terms of big stimulus, I think you could see a consumer retrenchment, well before that date, and a much worse outcome on the economy and on markets.
And what about the near term? Kevin Giddis of Raymond James, chief fixed income strategist, writes the following. The fixed income market is underestimating what a blue wave, should it occur, could mean for the fixed income market in general. It is not a reach to think that we could see a massive increase in spending, higher taxes, increased regulation, and a lower dollar. Tom Keene, we see that weaker dollar right now, and we see those high yields through this morning.
This is incredibly important, as John mentions. This Lisa Abramowitz out with a 530 spread yesterday out on Twitter, a great Bloomberg chart. I would note the vanilla 210 spread back to where it was in March of 2018. This is the interview of the day on fixed income. Kevin Giddis is with Raymond James, and critically important, he comes off a trading platform where he understands suddenly the bid slips away in fixed income. Kevin Giddis, is the bid slipping away on price in full faith and credit?
Well, Tom, we're finally starting to see this. A week ago, I would have said probably not, but we are starting to see this period closer and closer to the election, especially if we get this blue wave I talked about, because, I have these kind of nightmarish feelings of 2016 after the elections. If you're a bond guy, you did not expect the outcome and you did not expect the price action after the election. So I think the bond market and the treasury market in particular is underestimating the fact that if you got this blue wave or a complete sweep, what might occur after that and why interest rates are likely to go higher, not lower, should that occur. So, higher spending, more taxes, increased growth, and growth tends to have a friend. It's called inflation. And if all of those hit the mark, then yes, rate moves would be fairly significant, especially in the 10-year and 30-year out for the balance of the year.
So at 1 p.m. today, Tom Keene is going to be closely watching the 20-year auction of treasuries. I know he watches every auction very carefully. Is this a supply story in terms of higher yields going forward, or is it, as you said, a growth and inflation story?
Well, I think from a rate move, it would be a growth and inflation story. We really haven't had a problem selling our debt. And you guys have mentioned it earlier in the show about negative yields in particular. And you look across the globe, where are the opportunities? There still is a great opportunity in treasuries, especially in the long end of the market. But the door is starting to close. And the only way it does close is if we get a blue wave. If we get whatever they call a blue tide or whatever you want to call it, where you still Republicans control the Senate, and even if you got a Democrat or a Republican in the White House, the rates aren't going to move that much. I think we're going to be, we know what gridlock looks like. But if you get a kind of a clean sweep, I think the Treasury market would have to catch up fast, which was, higher rates across the board. But I don't think it hurts financing right now.
Kevin, you mentioned 2016, and it wasn't just the political event that was unexpected for many. It was the outcome of that political event that people missed. What the red wave would mean for markets. What do you think people are missing right now, Kevin? Be specific. We know the consensus. People think a blue wave increasingly, the probability is lifted over the last couple of months. What is it you think people are missing about what that means?
Yeah, the part that they're missing is the inflation part of the occurrence. 2016, if you remember, we went from a 180 10-year the day before the election to almost a 250 by the end of the year on the expectation of deregulation and tax cuts and growth. And that what was anticipated was that inflation component that really never came. We did see it when the GDP peaked in the first quarter of 2018, and then inflation reached its highest point in May of 2018. The point of this is now is they're not thinking about it in the ways that you would normally think about it, is that growth will bring that inflation at some point in time. It may not be in the next few months, but the bond market tends to try to get out in front of any uncertainty, and I think we're starting to see that now. I think we'll see it for the next few months through the election.
So, Kevin, how would you push this view through fixed income right now? Where's the misprice that you want to take advantage of?
It's, John, it's really still hard to find, but one of the things that are really going either way this goes, the tax-free muni market is likely going to gain. If the prospect of higher taxes is going to support that market, an uncertain or continued environment is probably going to support that market. We're still at 121% tax-free yields to the 10-year versus where we were at 75% in the pre-crisis period. So I still think that even though a lot of state, county, and municipal credits are coming to market now, there is value in the muni market now, no matter who takes the White House and who actually owns the Congress.
Kevin, long ago and far away, we had a Monroe Trader where we could enjoy price declines. You and I have hallways of people that say the bond market never has a bear market. Can you model out a bear market to come, price down, and yield up off of my Monroe Trader calculations?
I always said that when my Monroe Trader stopped working, it was the end of my career. So I still have a couple of them around.
Kevin, that's when you bought a Bloomberg. Thank you. And Mike thanks you this morning. Are we heading for a bear market in bonds?
So we have the potential for it, Tom, but really the only way we're going to see a bear market in bonds is if we see this big blue wave occur at election time, in my opinion. The rest of it looks like we will get increased stimulus at some point in time. We think that may be inflationary somewhere down the road, but we're still making up a lot of ground from what's happened during the pandemic, and we still have the pandemic to deal with. So I don't think it's extremely bearish unless we get this scenario play out in a blue wave after the election.
So the reflation trade that you're talking about, this idea of higher growth, has led a lot of people to feel safe or safer going into the riskiest bonds. And this morning I was looking at the spreads, the extra yields that investors demand to own the riskiest junk bonds over benchmark rates. It has contracted back to February levels. We are trading at about the average of last year. It is as if the pandemic did not happen. Is this market right that we are not going to necessarily get an escalating default cycle? Is that what this market is saying, or is it saying something else?
Well, Lisa, it's saying that, but I'm not sure it fully realizes that that may not occur. So I think, as you point out, I mean, we are almost to the pre-crisis spread levels, and certainly high grade in IG corporate debt, and almost there again on high yield in particular. And that's a sector I would be very, very careful with right now, because 290, 300 over the 10s for high yield is not enough of a cushion for me based on where I think we're headed. So I think even so, let's say nothing happens or nothing changes, less than 300 for high yield is expensive purchase for a portfolio for me. I still would favor IG debt, but realize you're going to get it at less than 100 basis points, and you have to be happy with that. So even if we get higher yields, spreads would tend to contract even further, but you would get paid a higher yield versus where the Treasury is now. So I just think that it's an expensive opportunity to take on that additional risk in fixed income.
Kevin, you live and breathe this world. I just wonder, from the conversations you've been having over the last few months, do you sense there's a little bit too much confidence in credit because of the Fed backstop?
Yeah, there really is, John. I think that there's a point here where we're going to see a lot more bankruptcies because they just have to occur, especially if you don't get stimulus within this calendar year. That is going to have an effect on credits themselves. But the offsetting opportunity, and you're seeing this a lot, even high yield companies, even the state of Illinois, are coming in and refinancing their debt at much lower yields, building cash positions, and they may see this. They may be able to ride the storm out without seeing as many bankruptcies as some are expecting.
On Bloomberg Radio, on Bloomberg Television, Kevin Gittes with us. And for those of you on radio, one of the cool things of Kevin Gittes is the Cincinnati Reds memorabilia behind him at Shea Gittes. Kevin Gittes, we just lost Joe Morgan. Bill James says Joe Morgan was better than the giant Rogers Hornsby. What did Joe Morgan mean to your Cincinnati Reds?
Well, if you remember, and it goes way back, we got him from the Houston Astros at that time, and it really filled the void, especially on second base for the Reds and the Big Red Machine at that time. So the impact that Joe Morgan had on both the organization and afterwards was long-lasting, and we were fortunate that he associates himself, or did associate himself, with the Reds versus the Astros.
Kevin, just a final question from me, just to end on a more positive note. Can you give us a review of what you would think of a player like Mookie Betts and why a team like the Red Sox would let him go?
He's killing me, Kevin.
Well, I've become, by default, a bigger Dodgers fan than I would admit, and I'm just happy that they have Mookie Betts.
Oh,
but I didn't realize
cut this
you
guy
got to go
off.
back before the Reds won a title in '90. The Dodgers haven't won one since '88, so they've actually been suffering along with us. Even though
So you're telling me Mookie Betts is the Joe Morgan of the Dodgers? That's what you're saying, Kevin?
Well, for a very short period of time. We'll let that play out over a number of years.
Oh, we will. Thank you.
Kevin Giddis and Raymond James. I get to do this for a number of years.
Killing me.
Beautiful. I get to do this for years, Tom. I'd love to do that every year.
John,
Dodgers. Am I a Dodgers fan now?
Oh, you are such a Dodgers fan. I could just see you sliding in with Haley Koufax behind the home plate there out at Chavez Ravine or whatever, and just loving it.
I can't afford.
You are such a Dodgers
afford your
guy.
tickets, Tom.
You'd have to get the $600 fancy Jacques sunglasses though to pull it off.
Yeah. I don't think that's me. I think I'm the $10
I can
seat
just see
in
you
the third tier.
Sunset Hotel, there. I could just see it.
That's the new insult. You're such a Dodgers fan.
The Sunset Hotel. Is that I don't even know if that's an insult, Lisa. I'll run with it. Alongside Lisa Abramowitz and Tom Keane, I'm Jonathan Ferro. Coming up, Jason Bazinet of Citigroup Global Markets. Yeah. Thank you, Tom. Futures down 3. We're down 0.1% from London and New York this morning. Good morning. This is Bloomberg.
With the First One News, I'm Rishka Gupta. Senate Republican leader Mitch McConnell may stand in the way of getting a new stimulus package before Election Day. Bloomberg's learned that McConnell has warned the White House not to rush into an agreement, and he hasn't committed to taking a vote. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are moving closer to a deal. Pelosi says she's hopeful for an agreement this week. The coronavirus pandemic is quietly gathering force in a region that has already suffered greatly. Southern states in the U.S. By absolute numbers, the region remains the national center of the pandemic. More people are hospitalized with COVID-19 across the South than in any other part of the U.S. Kentucky just hit record hospitalizations. West Virginia and Oklahoma did so on Friday. And a new report on President Trump's taxes reveals details about his activities in China. According to the New York Times, that includes a previously unknown bank account. The paper says the president spent a decade unsuccessfully pursuing projects in China and had an office there. The president and his allies have denounced Joe Biden for being soft on China and point to his son's business dealings there. And it's an echo of the Cold War. The Western world's premier spy alliance has found a new focus with the rise of China and President Xi Jinping. The Five Eyes network is made up of the US, UK, Canada, Australia, and New Zealand. It's seeking better intelligence on everything from coronavirus to child trafficking. And other nations now want in. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Okay, ladies and gentlemen, new order placed to buy Canadian dollar at 131, 116. Okay, other place to buy Canadian dollar at 131. Let's do this. Yeah, just a little bit above of blue candle. Okay.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
Sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
The same way that there was a push to re-regulate the banks after 2000 and 2007, you're seeing that now with tech. It's been the leadership sector. That's where the innovation is, and certainly it's forced the regulators to take an eye and look and see about monopoly pricing power. And so I don't think this is a blip.
Henry McVeigh there, KKR head of global asset allocation, on the latest regulatory push on the big names in Silicon Valley. From London and New York this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's your market this Wednesday morning. Equity futures just slightly negative in the last hour on the S&P 500. Down 4. We're off by 0.1%. Talked a lot about the bond market. Lift to yields again, up 2 basis points to about 0.81%. In foreign exchange, weaker dollar bleeding through G10 and against the Chinese currency as well. But the stock to watch, Netflix, down in the pre-market, Tom, by a little more than 5%.
Yeah, Netflix down as a tech derby starts here. Jason Bassinet joins us with Citigroup right now, and of course we'll get to Amazon and Prime Day and all that in a moment. Jason, does Netflix finally have competition in the streaming wars? Are they finally not the only streamer on the block?
Well, I think that's 100% true. I mean, the market is definitely heating up. I mean, we've got Tubi and Pluto and HBO Max and Peacock and Disney Plus. So yeah, the market is definitely getting more crowded. Netflix was obviously a trailblazer and sort of showing everyone the way, but I think the traditional media companies have sort of woken up and are starting to pivot.
And Jason, some of those companies have reclaimed the content as well. We've seen this play out now over a number of years, a number of quarters. What does that look like at Netflix at the moment?
What does it look like in terms of the content? Well, I think
Netflix, in terms of how much they've got to spend on the content, how they replace it, what it means for the amount of subs, the subs they could be losing.
Yeah, so this is what's so interesting. I mean, Netflix has sort of trained the market like a bunch of Pavlovian dogs to react to better subscriber numbers, and those better subscriber numbers always require more and more spending. And, what happened during COVID is it was sort of this jolt to the market because suddenly you were getting a lot of net ads, right, without a lot of incremental content spending because production was shut down. So Netflix added in the first half of the year almost as many subs as they added in all of 19. And the market looked at that and said, oh, this is one of these, structural winners. It's a sea change, more streaming. And to the company's credit, they sort of told everyone, this is just a pull forward. We're just pulled a bunch of demand forward, and so it's going to be pretty soft. And the market was essentially betting against that. But that's actually what happened. I mean, the subs sort of came in softer. The trick for Netflix going forward, from my perspective, is the strategic question for the CEO and the board is,
how do we move from a model where we just spend a bunch of money on content and get subs but burn cash to actually demonstrating that this is a great business?
Jason,
go ahead.
Well, I was just going to say, I think that Netflix has its next hit on.
New position opened for Canadian dollar. That's a long position at 131.116. Okay.
That they brought forward a lot of the market share gains and that they cannot post the earnings and the profit gains that people have been expecting going forward.
Yeah, I think it very much depends on the company. I mean, there are going to be some companies where that's true and others where it's going to be less true. There's no sort of simple answer to that. It depends on the business model.
Jason, I want to shift to Amazon. There's two countervailing themes here. One is the huge success of Prime Day and how you extrapolate that into what a cardboard box makes for them. And the other is the cloud, all the upset at IBM over their competition, et cetera. How are your margin beliefs on Amazon, not only forward a quarter or two, but forward 5 years? Can they sustain margins across these disparate businesses?
Well, I don't think that it's about sustaining margins. I think you've hit on something that's sort of misunderstood on the buy side. Our view is that what Amazon is doing is sort of intentionally having, selling products to consumers at very low margin, using that infrastructure to sell services to businesses at a profit. So what are those services? It's AWS, it's ads, it's commissions, it's fulfilled by Amazon. It's a very interesting strategy because it's not predicated on sort of making margins, on e-commerce, on things. It's all about making margin on services. The market tends to go back and forth on Amazon. Sometimes they care about revenue growth. Sometimes they care about margins. We're definitely in the revenue part of the narrative right now. I'm sure it'll go back at some juncture in the future.
What is your sustained revenue view? Forget about a couple quarters out, 3, 4, 5 years.
Well, the interesting thing about Amazon is it's still, it is global, but really they've demonstrated the efficacy of this strategy of using this dual-purpose infrastructure, fulfillment centers, web traffic, servers, really in the United States. And so I think there's just probably a longer runway for Amazon than any other company that I cover, because it's very U.S.-centric, and they're just starting to roll this out at scale, outside the United States.
Going forward, taking a look at the big tech rollout of third quarter earnings, who do you think will be most like Netflix in under-delivering the market's expectations?
Well, I think the kissing cousin are going to be the video game publishers. I mean, during the lockdown phase, you saw a lot of in-game monetization, a lot of, gaming going on. The companies were very similar to Netflix in that they cautioned that it was a pull forward. And similarly, the market, so far hasn't really believed that.
Amazing. This market does not believe what is being told by these companies. Jason, great to catch up, sir.
It's a bull market, right? Yeah.
Exactly. Jason Bazinet of Citigroup. I think Jason just nailed it there, Tom. When you're in a situation where the company's telling you something, literally spelling it out, and no one believes you, and you are there telling the investors that this is a pull forward, and yet still the stock gets bid up as aggressively it did. You heard it from the analyst just there. That's a bull market.
Well, you see, not that I'm expert on Snap. I mean, I look at it socially and all that, but I look, John, at the Snap overnight, and again, it's just these tech juggernauts just continuing to extrapolate out. And you heard Mr. Bazinet there separate carefully from the mysteries of the income statement just up to the blunt instrument of revenue. And revenue solves
Lisa has
a lot of
Lisa's
problems.
got a list, Tom, of reasons to be bearish, and it sits there on her desk, and she just does this and just ticks every time someone comes on. Just another reason to be bearish, Lisa.
Well,
people not listening to the C-suite.
Yeah. This is just a bull market. People just completely ignoring facts. Yes, this is a reason to be bearish. At the same time, the other side, the potential optimist out there, should she exist, would say, well, everything has to reprice up if yields remain low. So, ultimately, I don't know. You can hear a lot of arguments out there that facts just don't matter anymore, John.
I love doing this. October 21st.
Oh, dear Lord.
Lisa Bravitz. People just ignoring facts.
I'm in triple leverage cash, so I'm just
a list.
Looking for an entry point. There are a lot of potential.
Just to do the 2020, I'm going to do the 2020 wrap and just put Lisa's greatest lines in it. Lisa's greatest hits.
Oh, dear Lord.
At the end of the year.
Oh, I'm
October 21st.
Absent.
People just ignoring facts. Alongside Lisa Bravitz and Tom Keene, I'm Jonathan Ferro. Here's the price action for you. Shaping up as follows on the S&P 500, 1 hour, 35 minutes away from the opening bell. Equity futures were positive, then they were negative, and they stay there. Now they're flat, down around about 2 points on the S&P 500. Elsewhere, in the bond market, yields up 3 basis points to 0.81%. And a story of foreign exchange. Euro dollar 118.50. It is a weaker dollar story. From London and New York, this is Bloomberg Surveillance.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos.
Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This has so entangled itself into our social fabric and into our social status pipelines and into the development of children that even if you opt out, that's not enough.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Live coverage of the final presidential debate Thursday at 8:30 p.m. Eastern Time here on Bloomberg Television and Radio.
People talk about a K-shaped recovery. It's absolutely true. Those at the bottom are having a very hard time.
It's not clear how exactly you get people out and spend the money and get the economy going.
The multi-year bear market in cyclicality is probably over.
The market is not as well prepared as it normally is for these kind of downside events.
Central banks and governments are in this together. They're one wallet.
We need support for the economy, both for monetary and fiscal policy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. 13 days out to the election. We've got lots in this hour. Wendy Schiller, Brown University, will join us here on the changing political landscape. The polls tightening up by every single report. But in the markets, there is market movement today. We'll talk equities in a moment with James Bevan. I love his work on a more long-term perspective. John, let's go short-term. Where in the bond market, John Farrow, are you focused?
Long end, of course. Front end's anchored. Bit of a snooze tied to what the Fed's doing. 10-year yield starting to break out a little bit over the last 24 hours. Just north of 80 basis points. Level to keep in mind, in at around 95. That was the intraday high in the first week of June. We have not reclaimed that level. Still some distance off it. But that just plays into, whenever we see a price move like this, it's a bit more fuel for that reflation narrative. It's price first, narrative second.
I saw in five-year break-evens, just a little bit breaking out here to higher inflation. John, what is the significance of the vanilla spread, the difference between the 10-year and the 2-year yield, really back to March of 2018?
Steeper, and I think Lisa was right to pick on the 5-year versus the 30-year. That's steepened out as well. Look, for me, Tom, many people are just focused on the election and what happens in the next 2 weeks. I think we've got to get much more broader than that for this bond market. Talk to Steve Major of HSBC about this. How self-limiting would a Treasury market sell-off be, given how much debt we've just added on the corporate sector and in the official sector as well? Globally, not just in the United States, what's the tolerance of the global economy to higher interest rates right now, given the amount of debt we've added to these economies in the last 6 months? I would say that's diminished greatly. And what you would see in sovereign debt markets off the back of a sell-off is a very self-limiting one. That's the argument I think the likes of Steve Major and others would present.
Yeah, it's clearly evident as well in the currency market, where you wonder where a stronger euro really begins to impinge all of the continent. Lisa Abramowitz, what is high yield and corporate doing? My trap is I'm always full faith in credit. What do you see in the other part of the credit markets?
Everything's great, really good. Total flows in.
I'm placing stop on profit for Canadian dollar at 131.136. Yep. We'll have 200 pounds in profit if it will execute our position at this price. Okay.
By the other central banks to suppress yields, the more likely outcome is a lack of productivity, zombie companies, a change in the structural shift, and that's sort of what I'm looking at. That's where my pessimism is focused, just to set the record straight, Tom.
God, John,
I know. She's skeptical, but
is this why you went to London? I think this is why Farrow went to London, is Debbie Downer. We welcome all of you on Bloomberg Radio.
Realist.
Yeah, we welcome all of you on Bloomberg Radio and Bloomberg Television as well.
Moving up my stop on profit for Canadian dollar to 131.166. Okay, stop on profit placed at 131.166. Doesn't really matter what kind of how much you got per pip. As you can see, we have, because we professional traders, we trade others people money. We have spread quite tight, and we got 100 pounds per pip. When we trade, you can trade with 50 pounds per pip. You can trade with 10 pounds per pip. So in this case, for example, we'll have 500 pounds in profit. If you will have 10 pounds per pip, you will have 50 pounds in profit, just as you can see in few minutes. This is how this strategy works. Okay.
$, whereas the street looks for 190, and this is even before we put in the possible risk of Mr. Biden sweeping the presidency and Congress and applying a tax hike to corporations that might deduct $10 from those numbers. My rationale for backing equities right now is the risk premium, the forward-looking return for being in equities against other asset classes remains elevated. It's very high against cash and bonds self-evidently, and I would say that equities are 2 standard deviations.
Moving further, my stop on profit for Canadian dollar to 131, just above, probably below the, what it will be here. That's great, 131, 186. Stop on profit placed, okay.
The consensus expectation is that Mr. Biden would be bullish for markets. Actually, I think that the most bullish would be some sort of gridlock in the US political system, where, for example, if Mr. Biden were president, the Senate remained Republican, because that would mean that the political agenda would be much more muted, and it could be left to companies to do what they do best, which is trying to achieve strong long-term shareholder returns.
James, this is, again, counter consensus. The idea of gridlock, a lot of people point to as a tail risk, the idea that there won't be some sort of fiscal stimulus next year as people are pricing in with a blue wave. How are you taking advantage of what you perceive as mispricings in the market right now based on this assumption that there will be a blue wave and that it will be positive for equities?
Well, I would say that there are some excellent long-term investment opportunities in the United States and globally, because if I'm right that the global economy gradually heals, I would say emerging markets are a fascinating play, in particular economies such as Korea, which have been sideswiped in terms of both investor sentiment and economic activity levels, and yet there are many companies capable of delivering strong long-term returns. I think that there are equally opportunities in Europe, and lots of people say, oh gosh, you can't go anywhere in Europe. Look, the Eurozone's in a mess, there's the Brexit risk. Why would we want to invest? Well, all of that bad news, I think, is in prices, and so I'm looking at companies like Schneider as entities that have excellent long-term credentials, and prices, in my view, simply don't discount the potential good news.
James Bevan, we just hit on Jason Bazinet, the wonderful analyst at Citigroup, and he was enthusiastic about revenue growth. We were talking of Amazon, but just of the revenue juggernauts. How does a conservative guy like you look at Amazon and Apple as value stocks, and particularly the crutch of going to the top of the income statement to justify ownership?
Tom, I would suggest that what we need to do is to think about the current free cash flow, the cost of equity, the return of equity, and the company's forward growth credentials. And I believe that in a climate of very low inflation, the prospects of low interest rates, and I certainly anticipate that the Federal Reserve is at some level engaged in yield curve control, meaning that they have the entire yield curve in sight rather than just cash rates, that we will see the valuation of the growing and dependable companies more highly rated than they are today. So I think that we can expect an expansion of the multiples of the more successful companies, the challenge then being trying to pick between the Amazons, who I do believe will deliver, and the Netflix, which I do think are overcooked.
Final question from me, James. There's a line from your research, your note. We think China has all the ingredients of a bubble that is yet to really start. Is it one you want to buy, and why do you think it's one that will begin?
I absolutely believe that in due course, the excess cash balances, particularly at the household level in China, will be deployed to the equity market. They will have a head of enthusiasm for the fast-growing stories. And I look at the credentials of a company like Alibaba as a fundamental business. I look at its global valuation relative to Amazon. And Alibaba, in my view, absolutely merits consideration in a global portfolio.
James Bevan, thank you, sir. Always great to catch up. Really fantastic. James Bevan there of CCLA on this equity market. Tom Keene, you heard it, over the next 12 months, he's looking for 3,800. Yeah. Earnings to disappoint. A lot of the heavy lifting to come from the multiple. But when it came to the politics there, he used the word risk. There wasn't happy talk around a blue wave.
Yeah,
there was talking about taxes.
A minimal amount of happy talk, but I did not hear a skeptical Bevan there. I mean, I feel, John, that, you know, part of the trap I'm in every day in booking is, you know, I go to our wonderful team and I say, I need more happy talk. I mean, can you get me some people that can deliver happy talk? And, you know, that's part of what we do here.
I'm leaving right now.
Is this to offset Lisa?
We are attempting but failing at offsetting Lisa at each and every moment, because happy talk is just, you know, Bevan was loaded there. Bazinet, happy talk on Amazon. Verone the other day on the charts, more happy talk.
Yeah, happy talk about, you know, Purina and Lysol. I can go there.
They're
Lisa,
showing
let's
good
talk about it.
organic
I think
revenue growth.
It's important to understand the reaction function of market participants, Lisa, and the bias at the moment seems to be over the last several months to buy. And there seems to be an asymmetry around the news. If it's good news, great. If it's bad news, it'll get better. That seems to be the takeaway.
And the reality is they've been right, and they very well may continue to be right based on the backdrop of yields and based on the backdrop of the fiscal impulse. I'm not saying they're not. It's just there is a dissonance, as we heard from Joe Stiglitz yesterday, of Colombia, of the underlying economy and some of the pitfalls that we're seeing and what we're hearing out of companies, as well as some of the enthusiasm in the face of facts, like Netflix showed. That's all I'm saying. It's interesting.
Who used to write the gloom, doom, boom report? Who used to write that? Who used to do that? Who was that? I can't remember.
Joe Granville.
That would be a great... Lisa,
Joe
that'd be
Granville.
Fantastic.
The late
the
great Joe
Abramowitz morning
Granville.
column.
She could. I mean, there's no
All right.
question.
I would love that.
Are we doing happy talk in the next section?
Tom Keene, Jonathan Ferro. I think this is happy talk.
It is.
It's like the odd bunch.
Joe
I don't know what
Granville.
this is.
Sounds about right.
Coming up, Wendy Schiller, Brown University Chair of Political Science. More fun to come. This is Bloomberg.
She's always happy.
With the First Word News, I'm Ritika Gupta. House Speaker Nancy Pelosi and Treasury Secretary Stephen Mnuchin are moving closer to a deal on a new stimulus package. Pelosi hopes she can get an agreement this week. That's crucial to getting a bill passed by Election Day. One problem: Senate Republican leader Mitch McConnell is warning the White House against a Pelosi-led deal before November 3rd. He hasn't committed to a pre-election vote. President Donald Trump's campaign burned through almost half of its cash in September. The money shortfall comes at a time when the president remains behind Joe Biden in the polls. His campaign cut back on advertising in some key battleground states for a while. And British Prime Minister Boris Johnson will impose England's tightest coronavirus restrictions on Greater Manchester. Talks with local officials broke down, and Johnson warned that lives would be at risk if the government failed to act. The Prime Minister also left open the prospect of a national lockdown if infection rates keep climbing. And shares of Netflix are falling today. The streaming service missed Wall Street's estimates for subscribers. That renewed doubts about its ability to maintain growth. Netflix had warned that the pandemic-driven subscriber boom wouldn't last. In fact, the company said the surge in new customers could actually suppress growth in the future. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I have to move up my stop on profit for Canadian dollar to 131.216. Okay. Stop on profit, and let's see if it will get executed. Not yet. Okay, let's wait. Let's see.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
We need to focus on the role of market power in our economy, the low wages, the fact that at the bottom wages are the same as they were 65 years ago, adjusted for inflation. And most importantly, we need the aggregate demand going up so that the economy, so that their jobs are there for all Americans. And that won't happen if we don't have that fiscal stimulus that Janet was talking about yesterday.
What a tremendous lineup of guests over the last couple of days. Professor Stiglitz following on from former Fed Chair Janet Yellen. Just brilliant. From London and New York this morning, good morning, alongside Tom Keene and Lisa Abramovich.
We close position on USD against Canadian dollar at 131.216. We have £1,000 in profit.
1960, and that lift in the bond market up about 3 basis points on a 10-year, Tom. 81 basis points is your yield on a 10-year.
Yeah, worth watching all this, folks. The yen through 105 to a stronger yen, 104.84 gets my attention as well. This is a joy, particularly 13 days out in the middle of this historic election. Wendy Schiller is at Brown University and is too modest to mention that she is part of the new 5th edition of the great definitive Gateways to Democracy. It is without question the one volume, 700-page, throw it at the kids and say, shut up and read a textbook on this American politics. And we're thrilled she could join us today from Brown. In the 5th edition, Wendy, or maybe in the 6th edition to come, you have to write about mail-in voting. What will you say?
Well, the world changed in 2020 for American elections, right? We have close to 83 million people have asked for mail-in ballots. It's about, at least 1/3 more than in previous elections. And they're returning them. And guess what? They're getting to the boards of elections. They're getting registered, they're getting verified, and they're getting counted. So the big crisis of that has not yet emerged in what we're seeing. And at least 37 million of those votes have already been cast, both in person and by mail. This changes everything about how we vote. It will probably lead to a higher vote turnout this year and in subsequent years, and it makes for a more engaged public. From a business, educational, political standpoint, you want people to be engaged. If you don't want your tax dollars wasted, you want people to be engaged. If they can vote more easily, they'll be more engaged. So I think this is a big factor coming out of 2020.
Yeah, but one of the problems is you had a Brown PhD student a couple years ago who wrote 400 pages on Mayor Daley, 1960, and JFK stealing the election. How do we get away from that thinking?
Well, I mean, the thinking that people will steal it, I think that's a hard thing, right? That's been ingrained, as you well know, as you know your history, ever since we basically started with these sort of protected elections called the Australian ballot in about the 1880s. Everybody's been worried about that. But so far, you have a lot of county boards, both Republican and Democrat areas of the country, that are counting votes and aren't losing them yet. So we have to go through that. Now, whether you reject a ballot because the signature isn't right or something's wrong with it, that's really locally controlled. And that will be the point of contention if this turns out to be a close race.
Wendy, given the success of mail-in ballots, is there any talk about shifting to, I don't know, an electronic method of voting, considering that we are in 2020 and the world is digital?
Lisa, that's a great question, but I think there's still some big distrust about hacking, particularly since that's made a big focal point in terms of the Russian hacking, the Chinese hacking, American hacking. You know, thinking about hacking a machine, people are still worried about that. I don't know if American voters are interested in trusting that to the point of giving up this sort of ritual of filling out a ballot and handing it in and signing it and showing identification. I'm not sure anyone's willing to move there, you know, in the next decade. But I think that just the fact that we get more engaged, just the fact that we realize it should be easy to vote, that's a huge difference. And I think that comes out of a lot of discontent with the system on all sides of the political spectrum.
Just want to run through these headlines coming from White House Chief of Staff Mark Meadows, speaking to Fox News in the last couple of minutes. Plans to talk to the Senate Republicans and Pelosi staff members on relief talks, still a number of issues to work on. And the main issue, the biggest issue, remains still state, local, and government aid. And Tom, that has been the issue.
Yeah, that's the only issue.
I think the last 3 months.
Yeah, totally agree. And John, I think Mr. Meadows is dead on. Wendy Schiller, there it is, but it's just not Democrat cities and government is the president and others paying it. Isn't it true that there are so-called Republicans, states and cities and towns that will be affected if they don't act?
Of course, places like Ohio, Michigan, Pennsylvania, North Carolina, everybody's experienced a surge. Everybody's had to spend a lot more money. Even educational systems have to spend more money to reconfigure their classrooms. There's a tremendous amount of need across the country. But the cynical view in me says that McConnell's looking at 2022. He's looking at his people. He's got a good year looking at 2022 for the Republicans. If they lose the Senate this year barely, they'll get it back, or they'll try to in 2022. If you add $2 more trillion to the deficit, then you got Republicans running on a $4 trillion deficit, which isn't a good look for them. So I suspect he feels like he can forego this and start looking at 2022 pretty much the day after Election Day. And that's, to me, why he's holding out. It's not just that he can't get the votes. I think he could. I think they think this is something they don't want to have to defend going into another election cycle where they could do well in 2022.
Wendy, if they were to pass a fiscal support bill ahead of the election, would that make President Trump look good?
Of course it'll make President Trump look good, Lisa. That's a really good point. It also makes Pelosi look good, make Mnuchin look good, and McConnell, if he relents, looks good. But to me, the checks don't go out with Trump's name on it, quote unquote. A lot of it's direct deposit, but this is a metaphor. So getting credit for it, when now, by the end of the weekend, 50 to 60 million votes have already been cast, the marginal utility of this bill to Trump shrinks every day that they wait, which is why Pelosi kind of finagled and sat on it and stalled, knowing that so many votes will have already been cast. I think she realizes he may get a bump, but it's not going to be as big as if they got this bill done a month ago.
Wendy, just quickly and finally, on the Senate, you said everybody would look good. Are there any candidates in the Senate that are worried about passing this bill because being a fiscal hawk is still attractive to a certain part of this electorate?
Yeah, I think the bulk of the Republican GOP Senate caucus All of them. They don't want to get primary. They're always worried about primary. Even if the Trump factor goes away, if he loses, there's still going to be a primary because people realize you can upend incumbents in primaries. We've been seeing that for about 4 to 6 years now in an active way. They're worried about getting primaried on deficit spending. And so if McConnell's looking ahead, this is what he's most concerned about. This is why he's taking the gamble that it won't pay off for them now. The ones that are going to lose are already going to lose. Let's look forward to 2022.
Wendy Schiller, thank you. Brown University Chair of Political Science. Tom, no happy talk there. That's just the reality of the situation down in D.C.
Plus, she's got the microeconomics going with a marginal utility. I mean, where else are you going to hear that, folks? Wendy Schiller is great. Again, her book, Gateways to Democracy. It is an awesome textbook. It's like that thick, I would say, is, I look, John, at all that's going on, and the market's giving it up, but still, I look at the spread market, and to me, it's news today.
Well, let's run through it. Equities positive by about 2 points, not even 0.1% on the S&P 500. In the bond market, through 80 basis points. We didn't have a single close, or haven't had so far, a single close below 70 basis points through the month of October. Just a lift as this month has progressed. And we've inched towards this election. That election, 13 days away. With Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg.
Gender-neutral language at the airport and on its flights. Instead of the greeting, ladies and gentlemen, the English announcements now use phrases like all passengers or good morning and good evening. There's no change to the Japanese version because we already use which is the honorific form of everybody, and that's already gender-neutral. JETA becomes the first Japanese airline to make the change as part of its greater initiative to tackle gender-based discrimination, following some other carriers. Air Canada and EasyJet started using gender-neutral greetings last year. Japan Airlines also ditched its mandatory high heels and skirts rule for female flight attendants earlier this year after the Kutu movement went viral on social media. That was the nationwide campaign to fight the rule that some women must wear high heels at work. So JETA now allows female flight attendants to wear trousers and flats if they want. Activists here have been pushing for change, fighting against entrenched gender traditions. The Japanese government does not legally recognize same-sex partnerships, although a growing number of cities have started to. So this change towards gender-neutral language could be a symbolic step for inclusivity in Japan.
From London and New York, this is Bloomberg Surveillance for our audience worldwide. Good morning to you all, live on Bloomberg TV and radio, alongside Tom Keene and Lisa Abramovitz. I'm Jonathan Ferro. 1 hour out from the opening bell. Here's the price action. Equity futures choppy today. Positive again, up 4. We advance a little more than 0.1%. Some really interesting things happening in the FX market. Dollar yuan, that's the Chinese currency. Chinese currency is the strongest since the summer of 2018. So dollar China lower. Weaker dollar, stronger Chinese currency. That's the story of the FX market, story of the commodity market as a copper price that is also at the highest since June of 2018. Big China factor. I know the supply disruptions, but there is a China factor in there in those two trades at the moment. Demand normalizing, coming back. Outside of that, in the bond market, here's the move in treasuries. Lower, yields higher, up 3 basis points to about 0.82% on a US 10-year. So that's the price action. A little bit earlier this morning, we had a guest on the program who tried to pump up the beige book coming out a little bit later. Michael McKee joins us now, our economics and policy correspondent. Mike, I've got no idea. Mike, should we be getting excited about the beige book coming out later?
Not at this point, Jonathan, because essentially the Beige Book helps the Fed set up for its next meeting. Its next meeting comes 2 days after Election Day, and given that we may not know who had been elected, Fed's not expected to do anything at that point, although there are concerns that the economy is slowing down. So a lot's going to depend on what happens with or without stimulus and the prognosis for that. But at this point, the Beige Book will tell us probably what we already know, that the economy boomed in the third quarter and has slowed going into the fourth.
It's not my fault, John. I'm working with what I've got. And honestly, I'm curious to see what the indications show with respect to the acceleration and the momentum in the recovery. Speaking of which, jobs, very important, especially as we wait to find out whether there is any possible stimulus deal to be done before the election. States and local governments, funding to them, that is the big sticking point. How much has the unemployment picture diverged depending on the state, Mike, especially when you look at some of the swing states?
Well, you know, the interesting thing about the state and local financing is a lot of it has to do with schools. And a lot of people did not go back to being employed at schools like custodians and lunch ladies and things like that because schools weren't open. Now we're finding very low transmission rates in schools, and many of these school districts are going to be reopening. And so we'll see if that number starts to go down. However, there were big losses for the states in the second quarter because of the coronavirus pandemic, and a lot of them say they're going to be cutting their budgets. Now, most of their budgets just went into effect October 1st, so we'll have to see if that shows up in October payrolls. We had a big decline in state and local employment in September, but that was mostly the schools. We'll see now what happens with the state workers.
Michael McKee, I make a joke about it with a beige book, but you know there is value to it, and there's the different colored books. You and I know, Michael McKee, the great work of the late Richard Yamarone at Bloomberg, tragically dying young. And Richard Yamarone, Michael McKee, you and I know it, had the acclaimed Bloomberg Orange Book, where he would actually go out and listen to corporate America. What does the Fed hear now when they listen to corporate America?
Well, from what Fed officials are telling us, they're hearing more and more uncertainty about the prognosis for the economy, that there was a rapid rebound, but now companies are trying to decide, especially smaller companies, are just trying to decide if they're viable, if they can continue to stay open, if they'll have enough business. The big companies are getting bigger all the time. They're doing well. You're not going to worry about Amazon, but you are going to worry about the fabric store on the corner. So that's what they're trying to figure out.
I don't mean to interrupt, Mike, but this is absolutely critical and frankly goes to Lisa's arch gloom that we've heard this morning. Which part of that business community does the Fed really represent?
Community, and that they want to help everyone. What they can do is make it easier to borrow, and it's the big, medium-sized to big businesses that have been able to borrow, and that's been the Fed's biggest contribution, is keeping interest rates low, which ironically is their job. A lot of people want them to lend more money, but the banks have to be the intermediaries there, and they haven't reported the demand. At least they haven't worked with the Fed to build up that demand.
Mike, let's talk about the fiscal help. What's left in the tank for the consumer after the huge amount of stimulus we had back in spring?
Well, there isn't much left in the tank because the pipeline has been turned off from Washington. There are savings, about 30%, according to a New York Fed survey, of what had been given out, the stimulus checks, was put into the bank. Now, people are probably spending that down now because they have been cut off from the extra $600 and the $1,200 checks stopped coming. So we don't really know when that runs out, but we anticipate that we will see slower retail sales. And if you look at services spending, which doesn't come up in the retail sales numbers, that has not gotten anywhere near as high as the retail sales numbers. So at this point, the economy seems to be slowing, and that's going to be a concern for the Fed, but one they really can't address. So they need Washington to act.
All right, arch gloom. I'm not that gloomy. I'm just looking at the ground and seeing that what you're saying is deceleration. And the question is this deceleration adequately being priced in and
just
accounted
going around
for?
looking at the ground. Not depressing at all.
By analysts.
Spending the day with her head down, looking at the ground.
Oh boy.
Michael,
okay.
save us.
No,
What is
I
wrong
have a question
with
here.
you?
Is there any leading indicator here that you're watching to determine whether analysts are getting it right in terms of how much the U.S. economy will decelerate?
Let me give you two answers. One, we look at services spending overall, and there are a lot of these high-frequency indicators, including restaurants, including air travel, that give us an idea of where we are with that. But since Tom brought up the late, great Richard Yamarone, there is another category that he used to look at all the time, and here's where I'll save Lisa.
Thank you.
Women's clothing. Women, according to Rich, were the controllers of the family budget. And so they knew when there was extra money to go out and buy things. And if the women's clothing sales are rising significantly, you can think that people have decided things are getting a little bit better. If they're stagnant or falling, then you can assume that things have gotten worse. That's the Yamarone indicator.
So that would be like the famed Richard Yamarone Prada monitor. I mean, is that what you're coming down to? I mean, seriously, Mike, right now, Big Box is killing it. Amazon's killing it. I think everything else in retail is really, really struggling to find a place, and luxury is just flat on their back. What do you see in consumer spending, some 69–70% of the American economy?
Well, you pretty much nailed it, Tom. It's the bigger box people and the delivery people. Online sales have been strong, and again, the bigger the company, the better off they seem to be. Grocery store sales were very strong. They've sort of leveled off now as people have gotten all the toilet paper they seem to need. So at this point, you do want to watch the optional spending, particularly at restaurants. Last week, the open table indicator declined a little bit, and we saw bar and restaurant spending in the retail sales report a little bit weaker than it had been. So you've got to be concerned about things like that. And then, of course, we can spend the day talking to Lisa about whether she's shopping.
You don't want to do that. I'm just telling you that right now.
Michael McKee, you did bring up something really important. That was consumers disengaging. Are you actually seeing real evidence of that happening in the U.S. economy?
Well, we're seeing it in a slowdown in spending, and the fact that services spending doesn't pick up a lot. What we're concerned about now is that a lot of states, because we're in the middle of this third wave of the pandemic that's really hitting, and you're seeing states start to close the optional businesses, the inside dining, bars and restaurants, that sort of thing. And if that's the case, then we're going to have another crimp on spending. It's not going to be a total lockdowns like we saw, but it is going to be sort of a spigot you got to get through, a throttling back a little bit of economic growth, and that growth gets recycled through the economy, so things slow down overall.
Michael, everywhere I look, I see new cars. It seems like everybody's out there buying new cars. Are we a 17 million unit economy? Are we something different, something new? Or is there a new mix between expensive new cars and more reasonable used cars?
Well, we went from about 11 million back in April to about 15 to 16 million now. I don't know that we get back to 17 million, but a lot of what people have been buying are used cars, and there seems to be a feeling that a lot of people are doing that because they don't want to use public transportation, and they want to make sure they can get to work. Now, does that fade as people feel better about the virus, and do we see car sales start to fade a little bit because those who were going to go buy cars did buy cars? That's going to be an interesting dynamic. The automakers were all preparing for a world where we were going to run out and buy electric cars, but now people have loaded up on used cars, and you wonder if that's going to delay a whole replacement cycle.
And John, so what we could say is car sales have decelerated.
You could.
You
could.
could. You don't want to say anybody's tapping the brakes or things like that.
What was that? Oh, okay. This is old school journalism, I think, Lisa. This is old school.
Decelerated.
Is that what we call this?
I'm looking at the ground.
AutoNation reported much better than expected earnings. Look at that.
Yeah, and they sell used
Michael,
cars
thank
in
you.
many cases. So.
Yeah.
We'll see you tomorrow morning, Mike, for initial jobless claims.
Yeah,
the
serious
estimate
report
right now,
tomorrow. Yeah.
870,000 is the estimate right now. The previous number, Tom, 898, just shy of 900.
I'm so glad you bring this up because you've got a debate tomorrow, and you got to wrap it around the debate. We're all this happy talk about Apple and Amazon and making money, trying to not lose money. You know what? There's a whole other economy out there off that statistic we see with Mike at 8:30 tomorrow.
Oh, you don't say.
There is, and one of the themes tomorrow will be American families and security and those kind of things, Tom. Won't just be about COVID-19.
Yeah.
But we know what the administration and what this president, more specifically, would like to make this debate about. The campaign's been pretty clear, foreign policy. And I think, Lisa, we already got a good idea of where things are heading tomorrow evening in Nashville, Tennessee.
Yeah, I think the mute button will be deployed. I'm curious to hear about China, a key issue, and frankly, a market-moving one, with people expecting Joe Biden to come up with something. They think that he's not going to be as hard on China as President Trump would be, which is one reason that people give for the acceleration in asset prices over there.
Yeah, but debates don't look like that. I mean, to be honest, guys, and this goes back to our interview or non-interview with Mr. Giuliani a few days ago. John, this is going to be a president who I believe wants to talk about the son of Vice President Biden versus Mr. Biden, who just doesn't want to make a mistake. Am I right on that?
I think we'll have that kind of moment tomorrow evening. You keep bringing up a conversation, an interview we had a number of weeks ago. I'm trying to move on.
It was not an interview of Happy Talk.
Just trying to move on. I don't know if you can call those kind of moments interviews. I'm not sure if that's what that was. With Tom Keane and Lisa Abramovich.
Crushed it, John. You just crushed it with the mayor.
Coming up, David Rubenstein, Carlyle Group co-founder from London and New York. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. Senate Republican leader Mitch McConnell may stand in the way of getting a new stimulus package before Election Day. Bloomberg's learned that McConnell has warned the White House not to rush into an agreement, and he hasn't committed to taking a vote. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are moving closer to a deal. Pelosi says she's hopeful for an agreement this week. The coronavirus pandemic is quietly gathering force in a region that has already suffered greatly. Southern states in the U.S. By absolute numbers, the region remains the national center of the pandemic. More people are hospitalized with COVID-19 across the South than in any other part of the U.S. Kentucky just hit record hospitalizations. West Virginia and Oklahoma did so on Friday. And a new report on President Trump's taxes reveals details about his activities in China. According to the New York Times, that includes a previously unknown bank account. The paper says the president spent a decade unsuccessfully pursuing projects in China and had an office there. The president and his allies have denounced Joe Biden for being soft on China and point to his son's business dealings there. It's an echo of the Cold War. The Western world's premier spy alliance has found a new focus with the rise of China and President Xi Jinping. The Five Eyes network is made up of the US, UK, Canada, Australia, and New Zealand. It's seeking better intelligence on everything from the coronavirus to child trafficking, and other nations now want in. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacroix.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Sometime in the next few years. I haven't announced the retirement date yet. And COVID, it's a crisis. So I'm dealing with the crisis here for that. But I know that the time will come eventually for me to leave. It's just not yet. And I'm not quite sure when it will be.
The gentleman from Whole Foods, Mr. Mackey, just really interesting guy. We'll go into that in a moment. We welcome all of you. Futures with a modest lift up 4. The VIX above 30 earlier this morning with some yield tension, now 29.83. Dollar weaker here. The yen, I note, 105 into a stronger yen, 104.68. John Mackey is misunderstood. Yes, he sold Whole Foods to Mr. Bezos for more than $1 gajillion. But what he really did was completely invent a culture. From Safer Way a zillion years ago, literally a vegan co-op, and I believe it was Austin off of UT. He built it into a juggernaut that changed everything in food in America. David Rubenstein, peer-to-peer conversations, Fourth Carlyle Group, had the privilege of talking to this truly original executive. David, what did you learn original from John Mackey?
Well, he's a very contented person. He is not as wealthy as somebody might think he would be from having started this incredible company, but he's wealthy by any normal human standards. But he doesn't care about money, really. This is his life. He's married, but no children, and this company is his child. And as he likes to say, he sold off his daughter to the wealthiest man in the world.
Well, he sold them off to Amazon, and, we all see the changes, those of us that darken the doors of Whole Paycheck. But, David, what is so important here are the processes he put in place around a core strategic belief. How did he do that?
Well, he's a person who really believed in the value of organic and healthy foods, and so it was easy for him to promote that because he really truly believed it. And ultimately, it turned out a lot of other Americans did as well. What he's done with Amazon, though, is Amazon has improved the technology dramatically, he would admit. And also, during the COVID period, online sales have been much higher than they would have otherwise been. He has said he's going to do this for a couple more years, but he doesn't know how much longer. He's a content person. You know, sometimes you get CEOs and founders who are still not happy with their life and so forth. He's a very happy person.
I think he spoke for all of us, though, when he said that 2020 is the weirdest year of my life. Why did he say that?
Well, because he's had to retool the entire company. It used to be that people came in for the shopping experience and walked in the aisles, and now they have to focus more on getting people to have pickup there because people don't want to walk in the aisle so much because of COVID. So he had to reinvent a bit the business, but still, and he has more competition than he used to have. When he had virtually no competition, he said, for the first 25 years. He's been the CEO for 42 years, and for 25 of those, there wasn't that much competition. Now, the major supermarkets are all having whole food kind of aisles and other kinds of organic food displays, and he has more competition than he ever had.
There's a question about his contentedness with the sale to Amazon, especially in light of the increasing scrutiny around big tech and monopolies, consolidation. Did he give an alternate view that was believable to you of the possible benefits to consolidation at a time when people are bemoaning the concentration of wealth and market share among the biggest companies in America?
Look, when you marry off your daughter, you're always saying, is this person going to be good enough for your daughter? So he's always saying, well, did I make the right decision? But in the end, I think he's content with it because Amazon has helped him in many ways. On the other hand, they've imposed some constraints that he might not be completely happy with. He would say he's 98% happy. David, which is pretty good for a merger.
David, it's widely understood that at the panels you and I have done in Davos, you've always wanted a mute button to shut me up. We're going to have a debate tomorrow night with some mute buttons. What is your prescription for your candidate, Vice President Biden, to survive Thursday to get to the election?
Well, I don't have a candidate. I'm an independent, and I don't give money to either candidate, just to be clear. But on the other hand, I would say I don't think the debate can change that many votes at this point. I'd be very surprised. I've been involved in debates over the years, and they have marginal impact. And so unless somebody does something outrageous, I don't think it'll have a big impact. So the main thing I think Biden has to do is just not make a mistake. And the thing that Trump has to do is not do the kind of things he did before. Whether he can do that or not, I don't know. The mute button will have some impact, but, you know, you can talk over a mute button, too.
Lisa, please.
No, that's news to you. You can talk over the mute button. That'll be helpful. Go on. Tom, carry on.
You know, I look, David, at this moment that we're in a country moving forward, and part of it for so many people is the inefficiencies or harm of capitalism. Defend the system.
Well, capitalism is as Churchill would have said, in effect, the worst system of all except for all the others. So capitalism has a lot of income inequality that's built into it because the people at the bottom don't do as well. On the other hand, it's created more wealth for more people around the world than any other economic system. So very few people are rushing to leave capitalist systems to go to communist systems or socialist systems. The immigration in the United States is pretty heavy. The emigration is very modest.
How will the outcome of this election affect your investments, if at all?
We make a long-term investment, so it's hard to say. In the end, I suspect that the economy will probably have some slowdown period of time in the next year or two. It's probably due for that. In the end, I don't think the tax policies are going to change all that much, no matter who's president, because Congress is probably not going to move dramatically on things. I do think the most important factor right now over the next 6 months is having an economic stimulus package, because it's clear that the last stimulus package is wearing off. If we don't have a stimulus package the next couple months, I think you'll see much higher unemployment rates and much lower growth rates.
David Rubenstein, thank you so much. Greatly appreciated. An interview with John Mackey, the founder, inventor of what we call Whole Foods and indeed organic as well. 9 p.m. tonight, peer-to-peer conversations on Bloomberg Television. On Bloomberg Radio, on Bloomberg Television right now, lots to talk about within a bond market, 0.81% on the 10-year yield. I wonder, Lisa, where the tension really clicks in. I think it's before 1.00%.
Well, this is the big debate, especially for big tech, the idea that low yields have justified these high PE ratios. And I guess we'll test it. Right now, it doesn't seem to be affecting things. I do note, though, that 5-year, 30-year yield curve at the steepest since December 2016 right now, Tom.
Yeah, I'm glad you did that yesterday. Look for those charts from Lisa Bramwitz, Bloomberg Graphics, out on Twitter that she does.
For radio.
So, yeah, well, she does so well. I'm looking at foreign exchange as well, folks. Dollar weaker. The DXY, that blended big country index, is under 93. That's a big deal. 92.65 signals weaker dollar, and you clearly see it with Japanese yen 104.61. A 103 on yen would be something. We're not there yet. Euro 118.64, and I do want to mention, we've barely touched on it today. Lisa mentioned the importance of China in the debate. Renminbi 6.65 yuan is stunningly distant from what we saw at 7 yuan. So it's interesting to watch the linkages here of foreign exchange into fixed income and then bring it over to earnings season. I guess the one thing I saw today of note on earnings was Nestle of Switzerland with a constructive view forward on organic revenue growth. We've got much more through this day, including Kevin Cirilli on the surveillance Gulf Stream down to the Pancake Pantry in Nashville. Cirilli in Nashville. A fog descends on Washington.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This has so entangled itself into our social fabric and into our social status pipelines and into the development of children that even if you opt out, that's not enough.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York and London, for our audience worldwide, good morning, good morning. This is the Countdown to the Open, and the Countdown to the Open begins right now. With 30 minutes until the opening bell, equity futures positive around about 0.1%. We begin with the big issue. New day, same story. Another deadline comes and goes. Speaker Pelosi extending talks beyond her Tuesday cutoff, hoping to reach an agreement by the weekend.
We all want to get an agreement because people need it. And it's urgent, and our economy needs it. We have one little bump in the road with the Appropriations Committee that is not sure they're going to be ready, but let's hope they are. We're starting to write the bill, and then we can have the negotiation. But I'm optimistic.
The White House expressing cautious optimism of its own, with Chief of Staff Mark Meadows saying, quote, "The conversations today were productive enough to have conversations tomorrow." State and local spending is still an issue that remains largely unchanged. The Senate remaining unchanged as well, with Leader Mitch McConnell warning the White House against a pre-election agreement. According to Washington Post reporting, quote, "Any deal they reach could disrupt the Senate's plans to confirm Amy Coney Barrett to the Supreme Court next week and could mean the end of their majority if it scares away fiscally conservative voters." If you're confused, prepare to be even more confused. Mark Meadows speaking to reporters in the last couple of minutes saying that Mitch McConnell, the leader of the Senate, did not warn the White House on stimulus. For more, Michael McKee joins us now, Bloomberg International Economics and Policy Correspondent. Mike, it's been confusing to follow this on Capitol Hill. It is clear as day to follow what the Fed thinks about all of this.
Yes, indeed. And we have some strong remarks out from a Fed official this morning. But let's start with that picture you showed at the top of the show of the U.S. Capitol in the fog. That's about where we are right now. We know that Nancy Pelosi is going to talk to Treasury Secretary Steven Mnuchin again today, now that he's back from the Middle East. But will they get an agreement? That's certainly possible. Will they get a bill through before the election? That's almost impossible at this point, given what Mitch McConnell said. McConnell's problem is twofold. One, he's got a timing problem. By the time they could get an agreement, get a bill drafted, get it through the House, and get it to the Senate, it's almost election day. And senators don't want to come back from campaigning, particularly the endangered ones. The other is that he's got to deal with a caucus that is afraid of A, being primaried for not being tough enough on the Democrats, or B, already running for president in 2024 and looking at this as an issue. So McConnell is bailing, it appears, on the president. That's maybe why he didn't tell the president what he told his caucus at this point. So it's looking still like there might be an agreement between Nancy Pelosi and the Treasury Secretary, but will there be any kind of bill on the floor? That's getting harder to say. What does that mean for the economy? Well, Bloomberg Economics has crunched the numbers, and they've come up with 6 different scenarios depending on who's elected and how many people are elected to each chamber. And they say that we could see growth in 2021 somewhere between 3.5%, which is their base case, and up on top there, if you got a $2 trillion bill, over 5% on the year. So you could see a major change in the way the economy looks. Which brings us to the Fed. And this morning, Fed Governor Lael Brainerd with a very strong call for additional fiscal action, saying the economy basically depends on it. Here's her quote: "Apart from the course of the virus itself, the most significant downside risk to my outlook would be the failure of additional fiscal support to materialize. Too little support would lead to a slower and weaker recovery. Premature withdrawal of fiscal support would risk allowing recessionary dynamics to become entrenched. It would hold back employment and spending, increase scarring from extended unemployment, lead more businesses to close, and harm the economy's productive capacity." Will anybody be listening? Well, she carries a little more weight than usual because, John, she's being talked about as a potential Biden Treasury Secretary.
Maybe that speech this morning is the job application. Michael McKee, thank you, sir. Fantastic roundup. Here's the price action, 26 minutes out from the opening bell this Wednesday morning, shaping up as follows in the equity market. Futures barely positive, up a single point. In the bond market, that's where the attention has been. A breakthrough 80 basis points. Right now, 0.1825%, up around about 3 basis points on the day. In foreign exchange, weaker dollar story. Really the theme through G10 against the Chinese currency. Dollar China coming down, stronger Chinese currency. Levels we haven't seen since spring 2018. Euro dollar, euro firmer too. That weaker dollar against that currency pair, 118.53. And in the commodity market, crude, $41, but all about copper. Multi-year highs on a copper price. A supply disruption, yes, but a China factor baked in as well. Nuvin's Tony Rodriguez not completely ruling out a bipartisan deal ahead of the election. He writes the following: the timing, contents and size of any fiscal stimulus package will be a key driver of risk assets. Prospects for a deal seem low, given reluctant Senate Republicans, but an October surprise cannot be ruled out. Tony, I'm pleased to say, joins us now. Tony, it's October 21st. There's only so much time left. Do you really think we can get this done?
Well, we certainly think that the probability is low, but we know that the incentive is there, certainly on the part of the administration to try to get something done. We certainly think that Pelosi is interested in getting a large deal that gets support for specific areas. State and local government certainly seems to be one of the stumbling blocks. But as I pointed out in our Nuveen piece, the Senate Republicans are really the sticking point here, and that's really where the focus has to be. So from our analysis, we think it's pretty unlikely that Senate Republicans are going to get kind of over the hump in terms of agreeing to any kind of deal that has a $1 trillion number on it.
So, Tony, this is the issue, I think, for money market participants as well, for our audience who are sick to death of following this story, particularly over the last few weeks. It's clear that everyone wants to be seen to be talking. It is clear that nobody wants to own the breakdown of these talks. As a market participant, when do you stop paying attention to these headlines going into this election, 13 days away?
Well, you make a great point. It's political suicide to be the one that walks away from these talks. So we do think that the rhetoric is going to continue, well, probably right into the election. So, again, our view is that the probability is quite unlikely. More importantly, though, we do think that while the stimulus is necessary to prevent this recovery from rolling over, and we do think that post-election, we expect there to be a deal, almost regardless of the administration. The specifics of the deal will look very different depending on who wins on election night or whenever it is that we find out who wins the election. But we do expect that there will be a deal. So when you're looking at a little bit more medium term, fiscal support is part of the base case. To the extent that that falls apart, you have a much weaker economic outlook for 2021.
Well, Tony, let's talk about the bands in the Treasury market then. It has been a narrow trading range of 50 to 90 basis points for the last 5 months or so. I say narrow, it's just been really, really disciplined, particularly over the last couple of weeks. Tony, as you look at things right now, a breakout through 80 basis points, up 3 basis points on a session, a curve a little bit steeper. This breakout, whenever we get a price move like this, Tony, more people start coming on programs like this talking about reflation. Is it just a bit of a squeeze over the last couple of days, or is it something more, Tony?
I would right now characterize it as just a bit of a squeeze. Our view has been that by the end of the year, we'd see a 10-year that's more in the 85 to 90 basis point range, so we're starting to approach that. Obviously, the bigger yield resistance lies around 95 and a half basis points, kind of the early June high. So we think that this is really just a little bit of a stair-step function in raising the range, but not necessarily breaking out of the range. We do think that if you break out of the range, you begin to run into some of the difficulties around what that does to slow down housing, for example, consumer durables, the levels of debt in the economy, whether that's from the corporate sector or from the government sector primarily, are really going to put a little bit of a brake on any kind of economic growth to the extent that we see rates really move into the, call it 1.25 to 1.5 range. So that is not our expectation through the end of the year or even through the first half of next year.
Tony, you're touching on what I think is one of the most important unanswered questions in fixed income right now, just how self-limiting a potential sell-off would be in the Treasury market, the tolerance of this economy in the United States, the global economy, for higher interest rates. Tony, do you have levels in mind when you start to think about how self-limiting a Treasury sell-off could be?
Well, it's a great question, Jonathan, and I would say that from our perspective, if you see a 1.5% 10-year, that's going to be extremely self-limiting. But probably more importantly is that we're not going to be able to really see whether that happens or not, because I think well before we got to 1.5, the kind of tightening of financial conditions that implies means that the Fed is going to move in to support the market. So that's really one of the biggest drivers, not only the Treasury market, but broader fixed income markets, both in the U.S. and globally, is that you have this essentially central bank put, both from the Fed, the ECB, the Bank of Japan. So I think that's really, we're not really able to see whether it's self-limiting, but our view is that a 1.5% 10-year would really start to put a drag on growth.
Centrally planned financial markets. Tony, great to catch up, sir. Tony Rodriguez on this bond market. Equity futures right now barely positive by about 2 points on the S&P 500. At the market desk with your movers ahead of the opening bell. Let's bring in Bloomberg's Abigail Doolittle.
John, let's start out with this morning's big earnings stock. And that, of course, is Netflix. Shares are down sharply after they missed the subscriber estimate for their third quarter. Another disappointment there. They put up 2.2 million subscribers added versus the estimate of up 3.3 million and the whisper of 5 million subscribers added. In addition, the fourth quarter guidance for subscribers was light. Competition seems to be eating in. Plus, it looks like that first quarter blowout really pulled forward. It seems as though there's some Netflix fatigue. Not so much, though, for Snap. Those shares are absolutely soaring, and the stock is set to open at a record, up 24%. They put up a big quarter. They beat the daily active user estimates. They reported a profit for a second time as a public company, and revenues up 52%. This is helping out the whole space, John. We have all of the social media companies, or many of them, popping sharply higher. Pinterest raised at both Bank of America and Goldman. Morgan Stanley says Facebook will benefit. It seems as though there isn't fatigue for social media during the pandemic, but perhaps Netflix, again, with that disappointing quarter.
Those stocks flying this morning. Netflix, absolutely not. Abigail, thank you. Coming up, President Trump cutting back on advertising despite trailing in the polls with less than 2 weeks remaining until the general election. That conversation up next with Mandy Zhu of Credit Suisse. From London and New York, this is Bloomberg.
Live coverage of the final presidential debate Thursday at 8:30 p.m. Eastern Time here on Bloomberg Television and Radio.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
I could call these guys, every one of them would give me millions. I'm president. I called heads of Wall Street firms. I'd say, hey, do me a favor, could you give me $5 million? I could raise more money. I've been a world's greatest fundraiser, but I just don't want to do it, because then they call you and you sort of say, hey, they treated me good. I got to treat them good.
President Trump putting a positive spin on his fundraising in the last week, despite entering October with a war chest nearly 3 times lighter than the Biden campaign. The former vice president leading in the polls as well, topping the president by roughly 9 percentage points, according to the latest Real Clear Politics survey. Bloomberg's Kaylee Lyons joins us now with more. Good morning to you, Kaylee.
Well, good morning, John. Let's pick up on that polling point because, as you said, Biden does have a relatively wide lead nationally, but the margins are much more narrow in some of the key battleground states. And I would point out that the president's polling right now is equivalent to about where he was polling at the same time in 2016. And we all know how that one turned out. He enjoyed a late surge in just the weeks before the vote. The thing is, a similar turnaround this time around would require, in part, ramping things up in some of those swing states. As we know, they are the ones that ultimately matter when it comes to the Electoral College. But right now, the president is actually having to pull back on ad spending in several of those because, of course, John, it costs to compete, and right now the president is tight on funds. If it comes down to a cash game, Joe Biden is the one winning at this point. At the end of September, the Biden campaign had more than $177 million in the bank, almost 3 times the president's $63 million. At the same time, and this is a shift in the dynamics from earlier in the race, the president enjoying a lead on funding for much of the race thus far. And actually, if you look back in April, the RNC had $255 million, while Biden and the DNC only had $98 million. That has now flipped on its head. The Democratic election campaign effort raising more than $130 million, and the Republican re-election effort in September. So the president obviously facing a financial constraint here. And another point to note, John, is that they're having to reinvest a higher percentage of donations into raising more money, actually spending 77 cents of each dollar received in the third quarter on future fundraising efforts. That shows the campaign is having a harder time raising money from small dollar donors, John.
Kelly Lyons, thank you very much. 13 days to go, and the big difference between now and 2016 as you look at the 2 weeks to go and the polls and how much they narrowed last time around. John Authers wrote a great note on this in the last week or so. The pool of undecided voters this time around, much smaller. The third party to take away share. We had one of them 4 years ago. We had 2, actually. Don't have that in a significant way this time around. The president has a bit of an issue. There is a huge debate tomorrow night in Nashville, Tennessee, and that is the last big opportunity to swing those polls in his favor in the same way they did 4 years ago. Mandy Zhu at Credit Suisse saying the risk of a contested election is significantly declining in the options market, writing the following. Investors are still pricing the election to be a meaningful catalyst, but we've seen a significant pickup in trades positioning for a normalization in volatility post-election. Mandy's with us now for more. Mandy, as you know, December, as you've pointed out, was the really rich part of the VIX curve for many, many weeks going into this election. Can you walk me through how things have changed in the last month or so?
Yeah, sure. So I would say for most of September up until the early part of this month, the close and contested election was the primary risk that investors were focused on, and that was what was reflected in the S&P vol curve. As you mentioned, December was the highest point on the curve, which is quite unusual. So investors were positioning for volatility to continue to increase after the election on the assumption that, it is close, if it's contested, it may take time, for example, if it goes to the Supreme Court, for the final decision to be reached. But over the past 2 to 3 weeks, we've seen a big change as polling leads, the Biden polling lead has grown. That risk premium in December has come in significantly and is no longer the richest part of the curve. In fact, now it's back to November, which is traditionally how, you would expect things to trade going into a meaningful catalyst. And even the November vol premium has come in quite a bit. So, a month ago, investors were pricing in about a 4.5% one-day post-election move for the S&P. Now it's down to about 3.5%. So certainly still sizable, certainly still substantial, but that premium is coming in as as we get into the final days of the race and as the polling leads remain quite large in Biden's favor. And then particularly on the VIX, I would highlight the most activity that we have seen on the VIX has been on the put side. So people playing for a normalization of volatility post-election to such an extent that VIX put volumes now exceed call volumes by the largest on record. And that's quite unusual because usually when you see such an imbalance in, put demand versus call demand, it's usually happening during a time of, big market sell-off, VIX at highs. That's when investors come into play for a normalization of volatility. So We saw it in March of this year, we saw it in 2011, 2008, etc. But now we're seeing it with markets still near all-time highs and VIX sub 30, right? So I think that just really speaks to how much attention is being paid to the election and how substantial that vol premium really got in November, December, that now we see such an overwhelming demand for downside VIX puts.
Well, let's talk about where volatility is underpriced in your mind. I know you're looking to cyclical names and sectors where you think that is mispriced, Mandy. Just walk us all through that.
Yeah, sure. So we do think, volatility is underpriced in a lot of cyclical names, given, that they are uniquely kind of positioned to either, benefit or to sell off depending on the election outcome. So, in our view, in a Democratic sweep scenario, we do think the probability of a sizable fiscal stimulus goes up. In that scenario, that should benefit cyclical names, which are also very under-owned. So we could see some explosive upside moves post-election if that happens to pass. But now, on the other hand, if we get, a split government, whether it's, a Democrat in the White House, Republican in the Senate, or, vice versa, we could have, an increased chance of fiscal gridlock, and that would be a drag on growth, which will impact cyclical names more. So we do think owning volatility in these cyclical names makes sense, given where we are, given rising COVID cases in the fall as well. And a more directional side, we particularly like looking at upside in, for example, financials. We do think, that is a trade, especially in a Democratic sweep scenario, that will likely play out.
Mandy, what is it about the sweep scenario that you think you should get some upside protection on financials?
Sure. So I think it really comes down to higher fiscal stimulus, higher economic growth, higher bond yields, steeper curve, and that should all benefit the cyclical names. So, if you look back to 2016 election, right, so what really turned markets around was this expectation of infrastructure spending and higher fiscal spending. And, if you look at what stocks or what sectors really benefited in the immediate aftermath of 2016, financials was one of the sectors that really rallied hard on the back of this, the prospect. So I think right now we're in a very similar setup. In the Democratic sweep scenario, I do think, we're going to get more fiscal stimulus. Financials is really under-owned by institutional investors. The volatility has come in quite a bit in that sector. So owning options look very cheap right now. And from a directional perspective, we think, owning upside call spreads post-election really makes sense.
Mandy, just a final question for me on the regional divergence you're seeing between, say, Europe, Asia, and the United States at the moment, and your thoughts on that, please.
Oh, sure. So one of the big divergences that we're seeing is especially between U.S. and Europe, is that as we go into earnings season, we are seeing a pickup in single stock volatility in the U.S., whereas we're not seeing that in Europe. Now, on the surface, might mean that people are expecting, earnings season to be more important in the U.S., but really, if you dig down deeper, it's really a function of large cap tech. So the fact that, the top 50 stocks the S&P is, overwhelmingly dominated by the mega cap tech stocks, and that's where we're really seeing the bid to vol, right? So a lot of upside call buying in tech going into earnings, whereas in Europe, you really don't have that tech overweight, and as a result, single stock vol in general is very muted in Europe relative to the U.S. So I think that's one of the big divergences that we're seeing between U.S. and Europe right now.
Mandy, always smart. Love catching up with you. Mandy Zhu there of Credit Suisse. Coming up on this programme, the analyst action you need to know. That'll be next in our morning calls. And later, Morgan Stanley's Dan Skelly joining us for the opening bout to talk big tech with earnings season entering full swing. From London and New York, this is Bloomberg.
Ada 3 kelompok
pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul